Hello, 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 hello. Check. Hello, hello, hello. Good morning. It is afternoon now. We are 1 minute. Hey, bus, oh, focus on the calm and dhanda. Why do I feel that people are slowly disappearing from the class one by one? Bad debts written off, normal loss one by one. Why the quantity of people is reducing so much? Huh? They quit CA? Fantastic. Fantastic. Okay. हाँ ठीक है. They must be living in high hopes that CA is the only thing that is the hindrance to my love life. So I leave this, so I will be successful over there. Not realizing that once you do this, you'll be more successful. हाँ. Believe me, experience I am saying. हाँ. Even your neighbors will love you. Now tell me, point number 3 of what? Special cases of cost of acquisition. Ladies and gentlemen, we are doing CA, inter, tax, direct tax, NTTI, heads of income, capital gains. Charging section 45. Capital asset done. Taxable transfer done. Computation is going on. Gross sale consideration done. Transfer expense done. Net sale consideration, bro, done. We are doing cost of acquisition. Amount incurred to acquire ownership is kawa. However, certain cases your cost will not be easily and readily available. You will have to put effort to get your cost. Special cases. Actually, this was supposed to be the first point, but now this will be the third point. For want of time, we unfortunately could not do it in the last class. The most important of this, believe me, ladies and gentlemen, I always do this as the first point. The most important for examination, the most important for your practical life, for all reasons, section 49, subsection 1, cost to the previous owner. If you are expecting any kind of inheritance in life, see, to be very honest, inheritance makes you greedy. That you are already. Inheritance makes you incapable. Inheritance makes you dependent, lazy. With inheritance, you can become Akash Ambani also, Anant also. Ek mota hathi ghumne chala. With inheritance, you can become whatever. At the end of the day, to show the real talent of yourself, you should be doing things without inheritance. Start from zero. Start from zero. And then see how the world respects you. In case with, if you look at yourself in the front camera, if you look at your current behavior, your ways of operating, in case your family throws you out, considering your current habits, then this section is not applicable to you. So now you will decide whether you are doing enough for your family to throw you out, then this section is not applicable. But in case your family does not throw you, in case you get anything in inheritance, this is the section. This is the section which is therefore applicable to everyone. Exam also, highest questions come on this. Real life also, none of us are unaffected. Everyone will get covered here. Let us understand what exactly is the story. Mr. X purchases a residential house in the year 0102. So for better and effective learning, participate please. You, Mr. X. What great thing you did in your life? Purchase. Purchased what? Residential house. And believe me, purchase of residential house is indeed a great thing. You purchased this house in which year? 1-2. At a cost of rupees? Acha, 1 lakh. You know that even before I started. Well, sir, this is the constant. Fantastic. In this year, obviously, there is going to be no capital gain. Capital gain, if at all will arise only at the time of transfer. But what happened? In the year 5-6, Mr. X unfortunately died. In 5-6, Mr. X. अरे 2 minutes का silence. 2 minutes silence over. Now I remind you of something I discussed before. This property, obviously, do we understand, will be burnt along with me, Mr. X. Okay, buried also, please. Now, don't get offended. Otherwise, sir, aisa kaise? You are talking only about. No, I believe in all faiths as long as you are paying me. See, the main thing is you should pay me. Then your religion doesn't matter. Correct again? Think about it. Somebody belonging to my community, somebody following the same religious principles as me, following the same food principles as me, but enrolls in some other coaching class. What I got to do with that person? Think about it. So, we are chartered accountants. We have only one religion. Ta-da! Ta-da! Ha. So, burn or bury. Choice is yours. Do that, no? With the property. No. Where there is a will, there are relatives. There is relatives, nahi, there are relatives. Mr. X died, so property went to legal heir. Say why. Once upon a time, I used to write Mr. Y's son. Then the feminists got excited. Why this discrimination? Why you talk about son being legal heir? Why can't it be daughter? Sorry, legal heir. Be any gender. Why? The property has transferred from X to Y because of death of X. Has the property transferred from X to Y? This is not a taxable transfer, and therefore there will be no capital gain on the transferor X. Sir, why? Sir, why? One reason. X is not getting anything. You understand? Second reason, bro, if you make it taxable transfer and X is liable to pay tax, so X will say, okay, assessing officer, come with me, I will pay tax. Come home. Most welcome. Most welcome. Huh. No. Second problem has a solution, which will be taught to you in CA final. If someone dies without paying taxes on the incomes earned before death, so from the wealth that you are leaving behind, which your legal heir will inherit, we will recover your taxes. And after tax, whatever is left will be inherited by the legal heir. It will be the duty of the legal heir to do all your tax compliances. Otherwise, we will prohibit that inheritance. So that still has an answer. However, we'll tax how? We don't have any consideration. There is no capital. Do you understand? So is Mr. X getting anything? Bro, he is not left with his life also. He is obviously not getting anything. He is losing everything. That means on this date, will there be any fair market value of the asset? Even if he is not getting anything, there is still fair market value. Supposingly the fair market value on this date is 20 lakh. Means can I say the value of the property has increased from 1 lakh to... Has anyone paid tax on that 19 lakh? No, because this is not a taxable transfer. So do you understand that this gain, nobody has paid tax. And now the property has ended with whom? Mr. Y, the legal heir. This Mr. Y has supposedly sold the property in the year 24-25. Now will there be capital gains? On whom? Mr. Y. Therefore, we will need sale consideration. That will be actual, no? Of course, immovable property, so we have to apply 50C. 50C, about 50C. Sir, I will watch on the same day, sir. 50C. Transfer of immovable property, actual selling price or stamp duty value, whichever is higher. Yes or no? So we assume that actual is higher. So sale consideration is not a problem. Even if it is a problem, we have completed sale consideration. The problem is about cost of acquisition. Correct? And for limited purposes, do we still have indexation? See, even if we do indexation or we don't do indexation, we will first need cost. Once we have cost, on that cost, we decide whether indexation has to be done or not. But what will be the cost of acquisition is the question, because only when I have my cost of acquisition, I will effectively and resultingly get my capital gain. The question is, what is going to be my cost of acquisition? Do you understand the question here? Question. Supposingly, I sold my property for 50 lakhs. So sale consideration is not a problem. Sale consideration will be what? 50 lakh. What will be cost of acquisition is the question. Mr. X, understand the full story. Purchase the property in the year 01024 rupees. Transferred to Mr. Y at the time of death. Not a TT because no money. At that time, the fair market value was 20 lakh. Finally, the current owner, Mr. Y, sold the property for 50 lakh. So current owner will have capital gain because sale of capital asset. Sale is a taxable transfer. Sale consideration actual. What will be cost of acquisition? If Mr. Y had purchased this property by paying money from his own pocket, then it would have been normal meaning of cost. Why is it special meaning of cost? Because the cost is not easily available. Whenever your selling price is not easily available, we put it under special cases of JSC. Whenever your cost of acquisition is not easily available, we will put it under special cases of cost of acquisition. Correct hai? What will be the cost? I'll give you some options. Option 1, 0 because he got inheritance free of cost. It is an option. Of course, it is an option. Option 2, take 20 lakh rupees because the day when think about it from Mr. Y point of view. The day when I got the asset, I acquired the asset, I inherited the asset. On that day, the market value was 20 lakh. Then take 20 lakh. Of course, 50 can't be the answer. That is sale consideration. I hope you are not confusing that. So 50 is not the answer. 0 is an option. 20 lakh is an option. Let's say this is the only figure left in the story. So let's make this also an option, 1 lakh. Or let's make none of them also an option. So 0, 1 lakh, 20 lakh or none of them are the 4 options that I am giving you. Everyone is understanding. We have to answer this. And do you realize all cases of inheritance have this answer and therefore this is going to affect the life of each one of you. Unless your family throws you out, knowing your habits, you know it better than me. Knowing your habits, you know it better than me. But the point is, here both sell drugs. So whom to sell? Ultimately, we have to keep one at least. So what they will do, there is confusion. Call me one day, I will sort it out. Okay. Between the 2 brothers, whoever pays me more commission, I will take that person's favor. Or let me put it this way: between the 2 of you all, whoever gets more marks in tax, I will take that person's favor. I think that sounds fair. Stop selling drugs only, no? You understand? Chalo, whenever you want to do good in MCQs, just eliminate the definitely wrong answers. For example, none of them is definitely not. There has to be some answer. Q heading is 1 lakh, so 1 lakh. Heading says cost to the previous owner. There has to be logic. So none of them is getting eliminated. Let's eliminate 20 lakh because it is easy to eliminate. 20 lakh can't be the answer. Please understand. If 20 lakh is the answer, that means we are taxing this amount. The total gain of this family was purchased at 1 lakh and sold at 50 lakh. Total gain is 49. On this 19, nobody paid tax because not a taxable transfer. See, if this was taxable transfer and somebody has paid tax on this value, then we can take cost because we have earlier also followed this format. Whatever is selling price today will become cost price later. So if this amount has been taxed earlier, then you can later make it cost of acquisition. No problem. We saw that in joint development agreement. We saw that in liquidation, but make sure in liquidation you take the dividend part also in the cost of acquisition. Full FMV. Correct or no? But this can't be the answer because nobody has paid tax on 20. So none of them is eliminated. And 20 lakh is also eliminated. We are left with 2 options, 0 and 1. You all are saying 1 lakh only because you read the heading. But I have a very strong argument in favor of 0. You have to agree that he got the asset free of cost. Did he? Did he get the asset free of cost? Did he? Yes. So फिर? Then what? नहीं. My question is why 0 is not the answer. Mr. Y का capital gain you are calculating. No. Mr. Y got the asset at what price? 0. And I am giving 0 in the option. 20 I understand. None of them I understand. Why is 0 not the answer? I want to know that. Now sir. No. Come on. Capital gain means logic. Logic. Carry on. Carry on. Contagious, bro. Carry on.
Mr. X का तो वो कॉस्ट करा बनता है और उसको जब ट्रांसफर हुआ बिकॉज ऑफ हिज डेट उसको वो तो कॉस्ट की बात है
Okay.
सो एज मिस्टर एक्स वाज हिज फादर तो उसने टैक्स नहीं भरा था एंड प्रॉपर्टी उसको ट्रांसफर हुई तो वो लायबल होगा उस प्रॉपर्टी का टैक्स भरने।
Very good. Anything else? Anyone wants to add? This answer, yes, ठीक है. If we go by the heading that is written, so 0 is not the answer. Cost to the previous owner is the heading, no. Cost to the previous owner is the answer in our example. That amount under section 49(1) is coming to rupees 1 lakh. Accepted. But why? Two reasons the class gave me, and both reasons together are the answer. Matlab, to class did not give, two students gave. One is that if no one has paid tax on 20 lakh, so no one has taken deduction also of 1 lakh. You agree at least that 1 lakh cost was incurred by this family. You are saying we won't take this as cost of acquisition because no one paid tax. But this we have incurred, no? So give us deduction. Family profit is not 50 lakh, family profit is 49 lakh. That's one reason. And second, you have to, for a moment, close your eyes and imagine Mr. X, Mr. Y, Mr. X, Mr. Y, father, child, same person. Father purchased, father is selling, but father is not there. So the son or daughter, whoever is doing the duty on behalf of father. He is only selling, just doing the duty on behalf of father. Or alternatively, Y is selling. Why only purchase? But why was at that time? So why did not have knowledge of purchases? So on behalf of why? X purchase, being the father. You have to, for a moment, imagine X and Y, same person, same person, same person. It is like the family of X and Y buying here and the family of X and Y selling here. See, the whole idea behind not keeping it as a taxable transfer is that we are understanding X and Y are the same person. So you can't have any gain on transfer to yourself. It is within the family transfer. And ladies and gentlemen, for this reason, we will be taking cost to the previous owner. And now do you realize, whatever you get in inheritance, whether it's a small land or a big house or a shop or an office or gold or jewelry, one fine day if you sell that asset and you earn your capital gains, selling price will be actual amount. Cost price will be the cost at which the previous owner acquired it. Cost to the previous owner. And I hope we have discussed this before also, so you are not wondering, sir, this residential house was purchased many years ago. So how will I get that person's cost? Every time ownership changes, no, a new agreement is made, and all the chain agreements are to be kept together. From the first time this was constructed, that is agreement between builder and first owner, to all the future owners. You go and check your own house ka papers, no. When the building was constructed till date, all the agreements will be there in that file if there were multiple owners. Though we call them chain of agreements. Bank will not sanction your loan unless until you have all the chain of agreements. Supposingly old building was demolished and new building was constructed, redevelopment. So that also developer makes an agreement with you, PAAA, permanent alternate accommodation agreement, PAAA, permanent alternate accommodation. Why permanent alternate accommodation? Old building he will demolish, new building he will construct. Your floor will change, your house number will change, the area square feet will change. So earlier agreement of your old house plus this will together mean that that old house has only become your new house. You have to preserve all those agreements. You will have all the cost of acquisitions. You will have to take cost to the previous owner. Understood? Understood? So let's summarize a few points. What did we learn here? Whenever a transaction is not a taxable transfer, whenever a transaction is not a taxable transfer, that means the gain between previous owner and current owner has not been taxed. Do you realize this gain? If a transaction is not a taxable transfer, the capital gain between PO means previous owner X and CO means current owner Y has been untaxed, and therefore in future what are we going to do? At the time of sale by current owner, we will take cost to the previous owner. At the time of this sale, we will take cost to the previous owner. Is that understood? Why we take cost to the previous owner by assuming them as the same person? Means one thing we have understood, that whenever this sale will take place, we will take cost from here. Next question. Now that we have decided what will be our cost, we will have to decide the asset is Latka or Satka, because asset Latka or Satka will decide that the gain is Latka or Satka, and the gain Latka or Satka will decide your tax benefits. Correct or no? So, to decide whether the asset is long-term capital asset or short-term capital asset, you will check the holding period. Holding period will end in 24-25. When will holding period start? Listen, there are two options. Option 1, I, Mr. Y, got the property here. So I start the holding period from 5-6. Or option 2, start from 01-02. End date is not a problem. Start date will be wrong. It does change the holding period. Chalo, try karo. Capital gain means logic, nothing else. 1-2. Unanimously everyone 1-2. Sir, why? Because, sir, same person means cost we are taking from here. That means holding period also will take from here. Start holding period from previous owner. Correct. And this is the actual date of transfer. And is not a problem. To determine whether the asset is long term or short term, start holding period also from the previous owner. ये correct है. So in this case, we will take holding period from 1-2 to 24-25. That means what are the first 2 points? Cost we will take from here, holding period here. Cost, holding period, cost, holding period. Very easy. That means I am summarizing the easy part of 49.1 with you here. I am going to now move to the most complicated aspect of 49.1, the most controversial aspect of 49.1, the most widely discussed aspect of 49.1 is the next point, but be clear. In cases where it was not a taxable transfer, inheritance is also an example. There are more cases where it is not a taxable transfer. We will always take cost to the previous owner, holding period, previous owner. Cost to the previous owner, holding period, previous owner. Now the next question. What about your indexation? Till 22 July, there is indexation. From 23rd July also, there will be indexation for tax calculation on properties in certain cases. So, indexation that way is not altogether eliminated. See, indexation also, the end date is not a problem. End will be when? Multiply by 363, 24-25. Indexation, the problem is start date will be what? Because once again, we have two options. Start here or start here. Start from holding period of or start from acquisition of previous owner or start from acquisition of current owner. That is the question. You understand the question? What is the instant answer with common sense? Previous owner. I also agree. I totally agree because logic is bigger than everything else. But I would like to show you something that we did yesterday. The definition of ICAI. See, we started Kawa By writing normal meaning. No. What is normal meaning? Amount income. Then we wrote normal meaning of ICAI. And do you notice something here? We take cost. So in our example, that is 1 lakh, cost to the previous one. This is easy. You are identified 363. But there is this word used here, and the word used here is year of acquisition by the assessee. Now, when we are calculating our capital gain right now, we are calculating capital gain for Y. Y is the assessee for whom we are doing capital gain. And if we see the acquisition of the assessee, going by the plain language of the law, then the answer has to be 5, 6. Ideally, you know what is the defect in the drafting of the law? They should have written assessee or previous owner. So in inheritance cases, we would have taken this. Otherwise, normally we take this. But because they have written only one word, even in inheritance cases, we have to take the year of acquisition of the assessee. Assessee and assessee in this case is Y. Which means this is the year in which the assessee Y acquired the asset. We have to divide by the acquisition year of the assessee. And which means, as per the plain language of the Income Tax Act, indexation will start from acquisition of current owner, which in our example is 5, 6. Do you understand what is happening here? Do you understand what did the first point teach us? The first point told us that take cost of acquisition from year, the previous owner. Take holding period from year, that is the previous owner. Cost, previous owner. Holding period, previous owner. Cost, holding period. Cost, holding period. Cost, holding period. Now finally the time came to give indexation. But if we read the act, so indexation, if you understand what is happening, indexation is going to start from year. Do you understand? This is what is written in the plain language of the Income Tax Act. Start from year of acquisition by the assessee. Assessee is Y, and year of acquisition by Y is 5, 6. Believe me, my dear students, first time when I studied income tax law 18 years ago, my sir taught me this, and even now happens to be my favorite tax teacher. He said cost, holding period, but indexation from year. Cost, holding period, indexation. In CA final, I learned the same thing. You know, your common sense, my common sense is not accepting it. Logical sense is not accepting it. You said, sir, everything you are taking from previous owner. You said, sir, same person, same person. Cost from 1 to holding period 1 to, then indexation also from 1 to. My common sense is also not accepting. From the first day, it was not accepting it. Then, sir, if you are taking everything from 1 to, then take indexation also from. But then we were shown the act, and this is what the law says. Illogical, but this is the law. Indexation should also be given from 1 to is what I feel, but the act says current owner. So in CA final also, I had to learn it like this as a CA final student. Cost, holding period, indexation. We had to actually tell our students, because when I was studying for final also learning. So my students also teaching. When I was learning for final, I was also teaching CA final students. I told them, listen, whenever you see any inheritance case, remember that the year of holding period and the year of indexation are different. That's what the law says. Here you take cost and holding period, and from here you will take the indexation. 2010 to 2012. 2 years after teaching also, it was like that. Ridiculous. But from 2007 to 2012, I studied and I made other people also study the same. Then suddenly, one fine day, a lady got very angry. A lady, she can get angry, bro. Okay, normally she will bash her husband. But maybe she did not have one. Or maybe she had one who was already bashed. She fought a case till Bombay High Court. This is a benchmark and one of the most famous case laws. Ask any senior about this. She feels like a family member is the number of times that we have used in our question answers. Because 49.1 will come always. In exam also, in real life also. So you need this case law. A case was fought in the Bombay High Court by a lady called Manjula Jesha. Gujju, to not easily accepting things that are illogical. Manjula Jesha, a lady, went to the Bombay High Court and asked the judge, "Kya nonsense is going on?" See, you and me felt that this is nonsense. But you and me sitting here and feeling this is nonsense is not enough. You have to go and tell the court it is nonsense. She said, sir, what is this? Cost holding period, indexation here. What nonsense are you trying to say that I incur a cost here and my inflation adjustment will be only of this period? See, Manjula Jesha gave the court an option. Sir, do one thing. Let me take this as the cost of acquisition. So what will happen? This period ka indexation is adjusted. Now you give me this much indexation of 20 lakh. But sir, if you take cost from here and then index from here, what nonsense is this? If everything is taken from previous owner, same person, then also take indexation. So that means, can I say Manjula ma'am is saying the same thing that you and me are thinking? Bombay High Court said, auntie is right. No, auntie nahi, otherwise you'll get confused. Manjula Ben is right. Start from acquisition of previous owner, which is basically 0102. That means, come here. These two are non-controversial. Everyone is on the same line. Cost from previous owner. Holding period, previous owner. Cost, previous owner. Holding period, previous owner. But where will we start indexation? As per plain language of the act, we start here. But as per Bombay High Court, in the benchmark judgment of Manjula Jesha, this is going to be your start of indexation. Yes, we find this more logical, but yes, in the law there are both options. As per act, indexation will start from current owner, and as per Bombay High Court, previous owner. This sounds more logical, and we have a judicial precedent to back our argument also now, Bombay High Court judgment. But a very important question now comes, sir, what we should do in exam? To hell with everything, sir. Where are we getting inheritance right now? We will get, and 20 years later we will sell. No. What should we do in exams, sir? Sort that problem for us. See, I'll keep it simple for you. As far as your exam is concerned, you should note this, that you will have to go and check the CII that is given. You are dependent on that. If they give you CII of current owner, that means they want you to follow act. And if they give you CII of previous owner, that means they want you to follow Bombay High Court. Of course, in this also you will have a query. Sir, if both given, so no problem. If both given, you have too much time in life, no? Solve any one of the two. I will solve every question in the class following Bombay High Court. 1. I am in Maharashtra. Bombay High Court is jurisdictional high court. More importantly, it makes logical sense also that everything you are taking from previous owner, then indexation also should be taken from previous owner. Correct, hai? But in any case, whatever you follow, always write a note. Even if you follow any one of the options based on the CII given, you should mention, supposingly they give you CII of current owner. So you will say what? Divide by 5/6, multiply by 24/25 and say that this solution is as per act. However, as per Bombay High Court judgment, the above solution can be changed. That's only that much. Indexation will start from previous one. No need to solve it again. Just write a note that there is one more option available in the law. Even when you follow one of them, supposingly both are given and you follow Bombay High Court ka judgment, which I will do in all the questions. I leave the choice to you. Still, you should write a note. What, sir? That this is as per Bombay High Court judgment. However, as per act, it will be from current owner and the above answer will change. Don't show that change. You have to show the examiner, I know it. You understand? You don't have to be intelligent. You have to show that you are intelligent. Honestly speaking, looking attractive has become more important than being attractive. But that's how it works. I know I am both. But that's how it works. Everyone is laughing. Then that is a contract given to one person. Everyone is clear. Whenever there is a case of inheritance, not a taxable transfer, we will take cost from zero controversy, cost from previous owner. Holding period from zero controversy, previous owner. Controversy is only about indexation. Indexation will be taken from current owner. As per act, current owner, and as per Bombay High Court, indexation also previous owner. Law का both opportunities or possibilities, and in exam का भी I have made it very very clear. Is that clear? Still not over. Last couple of points, then we get done with the most important point of your cost of acquisition. Last couple of points. First, cost to the previous owner is compulsory. Means, I hope you are not thinking, sir, can I take this? Sir, I'll do one thing. I'll take this and take only this much indexation, sir. Do I have that option? No, bro. You don't have any option. You don't have option of whichever is beneficial. There is no such thing here. You have to mandatorily, compulsorily take cost to the previous owner in all cases of not a taxable transfer. Understood? Very easy point. And last point, absolutely last point here. Is it possible that previous owner also acquired through not a taxable transfer? Previous owner also got it in inheritance. Supposingly X inherited from P, P inherited from A inherited from T, like that. Ancestral property, generation after generation. Is it possible? A to B, B to C, C to D, D to X, and X to Y. All of them were inheritance cases. So not a taxable transfer in all the cases. Finally, when Y sold, capital gain is coming here. Now for Y, when we take cost to the previous owner, it is X. But unfortunately, there is no cost of X also, because X also got the asset by way of inheritance. Whatever you are thinking and guessing is right. Just guess it. Bas. From the ultimate previous owner. Assuming A was the first person who purchased it. If previous owner also acquired through not a taxable transfer, then we will take what? Cost of acquisition and holding period from the ultimate previous owner who acquired through taxable transfer. बस एक मिनट. Ultimate previous owner who acquired through taxable transfer. Correct है? So whenever there is a case of not a taxable transfer, cost to previous owner, holding period previous owner, but indexation will be given from current owner as per Act, previous owner as per Bombay High Court. We will follow previous owner only, but we will always write a note. This is compulsory and ultimate previous owner. Is that clear, everyone? Huh? What if A का cost पता नहीं? Why? I just some time back told you about chain agreements. बहुत पहले also 1 rupee you must have acquired. कैसे नहीं होने? तो how do you prove that it is your asset? So you give a newspaper report. Correct है? If you have acquired, the doubt simply is, I'll tell you what your doubt is. Sir, what if I have acquired the property 100 years ago, 200 years ago? This is like too old that there is absolutely no record of it. Honestly speaking, that means cost of acquisition is, you take that 1 or 10 rupees of that time, it is as good as taking 0. But still, we are now in the third case of special cases of cost of acquisition. When I come to my case number 5, I will come back to you on this. My point number 5 of special cases of cost of acquisition is going to answer this question better. Is that clear? So we'll have to wait and watch. Doubt? No? Everyone is clear on this? Hello? The most important case, in case you are expecting a single rupee of inheritance in life, this is going to be applicable to you. Is that clear, everyone? Fantastic. Just give me a minute, please. Okay, that was our point number. Hello. That was our point number 3 of special cases of special cases of cost of acquisition. Moving on. Next, case number 4. Very, very easy. Cost of bonus shares. You know what is bonus? If you don't, We'll repeat what just happened. You know what are bonus shares? What is their cost? So nil, no, bro. By virtue of your existing holding, you are getting free shares. Nil, correct? So, but that is actual cost 0. It is a normal meaning. See, what are we doing? Special cases of cost. Where we know the cost, that's a normal meaning. When we don't know the cost, that's a special case. So we know it is 0. And that's the answer. Wait. Slight twist. Except a case which falls under section 55(2), in all other cases, cost of bonus shares will be 0. And you know this part. See, this answer you only give. Correct, hai na? Except section 55(2). What's your question, bro? So that's my next point. Section 55(2). The FMV option. Option. Whenever we have an option between two things in income tax, we will choose wherever our tax liability is lower. Minimum, beneficial, lower, less, okay. Option. This will answer your earlier doubt also, sir. Very old property, I can't determine the cost. And this will answer this bonus, we wrote 0 and then we said except this. So basically that is only this. Let us see what is this concept. If an asset, and by the way, this doubt someone should have asked me earlier when I taught you indexation for the first time. If an asset is acquired before the base year 1401, no one asked me this question. Don't you think what the question is? Chal, I have given you the full situation. Ask that question. Right now, ask me that question. Earlier, you did not ask. No problem. Now ask. What is the problem of these assets which I have acquired in 95, 96, 97, 98, 99? What is the problem? What is the problem of indexation? CII nahi hai. Of which year? Of the year of acquisition. Sir, why? Indexation ka base year is 0102. So indexation that way appears to have started from 0102. What is the first year of indexation? What is the first year? Is it you? Everyone is 0102. What is the cost inflation index? 100. If I acquire an asset in 0102 and sell it in 2425, I will divide by 100 multiply by 363. Correct, na? But supposingly I acquire an asset. Think about it. Before the base year. This is the most important condition. If I acquire the asset in 95-96, okay? And I transfer my asset in 24-25. First of all, it is long term. So for multiplication, I will have 363. The problem is I will divide by cost inflation index of when? Because the earliest cost inflation index I have is the base year. The earliest I have is this 100. Even if I take, you understand, this is where my cost was incurred. If I take my cost from 95-96, I multiply by 363 divided by 100. That means I have given this much indexation. But do you realize I invested my money for this much time also? I should be getting this much indexation also. But before base year, there is no cost inflation index. No one asked me that question when I said base year 0102. That answer, sir, property taken 100, 200 years ago, I cannot determine cost to the previous owner. That answer, or this bonus share ka 55(2), that answer, everything is hidden. They are saying, whenever an asset, this is where the sentence starts. Whenever an asset is acquired before the base year, is this a case of asset acquired before the base year? You can take your actual cost of acquisition. In our example, you incur that actual cost of acquisition in the year 95-96, or the fair market value on 1401. Now, what is 1401? The beginning of your base year, the beginning of your indexation. You can take out of the two. You understand? In cost, what should we take? Whichever is higher or lower? Option. Because if we take higher cost, so we will have lower gain, lower tax. Acha, by the way, don't infuse your costing knowledge here. No, sir. My costing teacher told me always keep cost less. Hey, pagal, if you have to pay, no, if you have to spend money, no, so between two options, spend less. Here you don't have to spend. You have already purchased. Here you just have to take in the calculation. So in the calculation, you take whichever is beneficial, higher cost, lower gain. Actual cost or FMV, whichever is higher. And here is the logic, bro. If I take the FMV here, this year ka beginning, no? So this FMV will give me indexation of this much time. Then do what? Divide by 100 and multiply by 363. So I will get my balance. Indexation of the balance time. Whenever an asset is acquired before the base year, this is the main condition. Only if this has happened. Supposingly, I have acquired the asset in 3, 4, 4, 5, 5, 6, 10, 11. I don't have this option because I have cost inflation in this. This is optional. This is optional. This option is only and only if asset acquired before the base year. This option is only and only if the asset is acquired before the base year. Correct? Everyone? Now you understand what is the logic? Everyone? So we have already answered two questions. Sir, if base year is 01, this question you didn't even ask me. If base year is 0102, what about indexation prior to that? Take FMB. That will take care. We have answered your question. Sir, if my ancestors acquired the property 100 years ago, I cannot determine that cost. That cost to the previous owner is unavailable. So this is unavailable. But this, there are plenty of valuers available in the market who will compute that value and give it to you. Go to the valuer. Valuer will take professional charges, do the valuation of your asset, and you will take that valuation as your cost of acquisition. That question is also answered. Everyone? And now then, coming back to this point, what is cost of bonus shares? Come on. Is it possible that bonus allotment took place before base year? So bonus shares received before base year allow you to take FMB as cost. Because this option. Is this an option? Actual cost or FMV, whichever is higher. Only one condition, main condition, deciding condition. Only if the acquisition took place before the base year. This option is available for all assets. Can I take this for land? Yes. Building? Yes. Gold? Yes. Jewelry? Yes. Bonus shares? Yes. Yes, sir. Yes. Bonus shares, actual cost? 0. So if the FMV is 1 rupee also, 1 rupee will be higher. It can't be negative. 1 rupee, whichever is beneficial. So listen. Original shares before base year. So we will take actual or FMV, whichever is higher. Bonus also before base year. We will take FMV, that is only higher. But original took place before base year and bonus allotment after base year. Possible, no? Bonus happens some years later. Then in that case, original we will take whichever is higher. But then in bonus, we will not get the option because for that option, it has to be allotted before base year. Then bonus, we will have to take actual cost, which is 0. If both happen after base year, original acquisition plus bonus allotment, then original also actual cost and bonus also actual cost, which is 0. And obviously, I am not discussing a possibility where bonus allotment took place before base year and original acquired after the year. Why? Why I am not discussing that option? Oh, early 90s, there used to be a TV serial on Doordarshan, Mungeri Lal Ke Haseen Sapna. That person was physically present at one place but lost in some dreams, some thoughts. Did you even understand what I just discussed? If both happen before base year, in both you get option. Original we choose whichever is higher, bonus FMV only is the answer. If original before base year, bonus after base year, so original you get the option. But bonus you will have to take actual cost, which is 0. Both happen after the base year, then both you will have to take actual cost. In bonus, that is 0. And I am not discussing original before base year and bonus after base year. Why? Because you can't get bonus shares without buying. Hey Bhagwan, I really have to explain this to you. Shall I repeat the session with you? You cannot acquire bonus without having the original shares. Try karna. Try. Have you ever given your measurement to the tailor first, then he gave your clothes? Try once. No, tell the tailor that send the clothes, then I will send my measurements. अरे that was also बाबू भैया from हेरा फेरी. अरे माप का क्या करने का रे, तू पहले कपड़ा तो भेज, माप में तेरे को भेजता हूँ. Try that, हाँ बेटा, try. नहीं ना? But this option is not available for depreciable assets. Can anyone give me the logic? Capital gain is all about logic. Why? Come on, we did cost of depreciable assets. WDV का rubbish. Why not available for depreciable assets? This is so easy, bro. Depreciable is always short term, never long term. There is no question of indexation. The whole idea behind FMB is the indexation. In depreciable, there is no question of indexation. Even before the amendment, there was never any indexation. And therefore, no question of taking the FMB. And by the way, in depreciable asset, WDV is the cost, not the actual cost in any case. And come on, this is easier. This option is not available for self-generated assets. And this also we discussed. Cost is only 0. Second, the whole FMV option is based on one main condition. What is the main condition of FMV option? Acquisition should be before base year. Bro, on which exact date you became a famous brand? Oh, you say, yesterday I was not famous, today I became famous. See, in the era of social media making people overnight heroes, instant popularity, it is possible that you became, popular overnight. Any example of social media heroes becoming overnight popular? TikTok starts, but I am talking about examples. Elvis bhai. Any other example? There was this singer Ranu Mondal. Overnight. There was this cute girl from Andhra Pradesh who did like this. Or 2 eyebrows, one at a time. What was her name? I don't know. Any other case? Overnight fame through social media? Mona Lisa? I have not seen. Because I have other work also to do. Kumbh Mela mein there is some Mona Lisa. There was this IIT Baba also in Kumbh Mela, Mahakumbh. One more was coming to my mind. Overnight sensation on social media. This stand-up comedian, this old gentleman, follower of Sikhism. Mummy kaisi hai? What? Mahip Singh. There is this stand-up comedian, Mahip Singh, very old, senior citizen. He is almost near his end, but he is asking all the young comedians, "How is your mom? Mummy kaisi hai?" And bro, to be very honest, however funny it may sound, the way he says it or the way he makes it look, bro, you may not be able to relate it, but slowly and gradually I am reaching that phase of my life and I'm actually able to relate to it. Believe me. Matlab, if by chance someone says, "Good morning, how are you, sir?" I am fine. How are you? Fine, sir. Mummy kaisi? Huh. Not almost, matlab not that age, but matter of 4-5 years, bro. So, woman my age ka kids will be in my class. Matter of 4-5 years. So I am actually able to relate to it. See, social media can make you overnight sensation, but social media comes with its hazard that it can overnight make you disappear also. If you observe the trends, see, as Navratri comes closer now, all the Navratri related songs and reels are continuously visible on your feed. As Ganeshotsav come closer, all the Ganpati related songs come in your reels. They automatically become the trending songs, etc. But the moment you stop trending, nobody is talking about it. When was the last time you saw a Navratri reel? Gotilo have go. Hetane jata joi panagat. When was the last time? It was in October. Since then, none. Believe me, that's true. So in case of a self-generated asset, a brand or goodwill, unless you are a social media sensation, there is no brand or goodwill. People forget you overnight. A brand or goodwill will be purchased if it is going to be sustainable. That became famous exactly on what it. See, my question is simple. Google became famous before 1401 or after 1401? Exactly on what date? People started saying, let's Google. There is no date determined. So there is no question of acquired before base year or after base year. Does that make sense to you? Bonus shares allotment takes place. So we know when it was acquired. Date of allotment is date of acquisition, no? Hello? So whenever an asset is acquired before the base year, we will get the option of actual cost or FMV, whichever is higher. That will take care of indexation between acquisition and base year. And you can take it for all assets. You can also take it for bonus. So this part is also now clear. Hello. I have answered 3 questions. 2. Only 1 you asked. 2 I only created. 1 which you asked, sir, if property is acquired 100 years ago by ancestors, what to do? Call a valuer and do FMV on 140. Second, sir, what if assets acquired before base year? What about indexation? FMV will take. And third, sir, in bonus we have that FMV option. Is that clear? Last. Not allowed for depreciable and self-generated, of course. Last. If stamp duty value, this is done by whom? Municipal corporation. See, FMV will be done by independent valuers available in the market. And they can be biased based on how much professional fees you pay them. But stamp duty value is not done by valuers. Stamp duty value is done by municipal corporation. If stamp duty value on 1401 is available, see, it may or may not be available. So the FMV that is being computed by your valuer cannot exceed stamp duty value. This had to be brought. This amendment was brought only 2 years ago, actually, because it was observed that my actual cost I can't manipulate. My agreement says, my chain agreement says that I had acquired the property for 5 lakh in 1995. I can't change. I can inflate my cost by satisfying the valuer. So I tell the valuer, what is value? A valuer, what is value according to you? Cost is 5 lakh in 95. But I have to take FMV here, no? Bol valuer, what is value according to you? 10 lakh. Make it 1 crore. No? I'll pay you 5 lakh extra. Please. Please, kya, by request, I'm paying you 5 lakh extra. You make it 1 crore, so my cost of acquisition will become higher. 5 lakh or 10 lakh should have been the answer, but 5 lakh or 1 crore will be the answer. You understand what is happening here? There can be manipulation, and therefore we will go and check stamp duty value. Stamp duty value on that date was only 9 lakh rupees. So listen, final answer will be 9 lakh. Okay, supposingly stamp duty value on that date was only 4 lakh rupees. Then 4 lakh won't be the answer because the actual cost can't be manipulated. You have to give me the deduction of my actual cost. FMV will be restricted. So understand what we are going to do. We will take cost of acquisition or FMV, whichever is higher. Is that what we were doing? But this FMV will be restricted to maximum stamp duty value. This is unrestricted. My actual cost has to be allowed. See, I am not saying that the final answer here will be restricted to stamp duty. The FMV will be restricted to stamp duty value. You understand? Hello? And then we will take actual cost or fair market value, whichever is higher. In this, we will not restrict cost because that is actual cost. We will restrict the fair market value to the stamp duty value if available. Any confusion? We will restrict it to. That's why I tell you to keep videos on, because I see your expressions. I understand if there is any problem. Okay. And I make sure that even my live class is as interactive as the offline coaching, because ultimately if I am not available in your city, that's your next best option. And best option we are all aware by now. So okay, no problem. FMV will be restricted to stamp duty value and will be compared with actual cost. So typically your comparison will be FMV or SDV, whichever is lower, that amount compared with actual cost, whichever is higher. Now clear? Now clear? Fantastic. That was your point number 5. This answers all the doubts about not having values of 100 years ago, 200 years ago, something like that. Point number 6 of Don't forget that special cases of cost of acquisition. Everyone is with me. Point 6 of special cases of kawwa. Everyone is with me. Point 6 is very easy. In fact, by the end of point 6, you may get a feeling it's not even a special case. It is actual cost of. But point 7 and point 8 are very, very complicated. If you study point 6 properly, so you are done with 7 and 8 also. The real talent is in you understanding point 6 ka explanation. So point 7 and point 8 will be taken care of. 6, 7, 8 are a related range. What is this? Cost of rights shares. Cost of rights shares to existing shareholder of the company. And for this, we got to first understand the meaning of a rights issue. A rights issue. Further issue, we call it. You have idea of what is rights issue? What is rights issue? Shares given at concessional price, not completely correct. To the existing shareholder, that also in proportion of their holding. And I will explain the logic behind that law in Companies Act. This is Companies Act. So can you believe this? I am teaching you logic of Companies Act despite getting paid only for Income Tax Act. That also is so less. I make it very, very clear to you. I make it very, very clear to you. This point has logic in the Companies Act. I am explaining the logic of Companies Act despite getting paid only for Income Tax Act, and that is also very less. Let us understand what is the logic in Companies Act so that you will understand the logic in Income Tax Act. Let us understand. Supposingly, a company has got two existing shareholders. One, SS, having 6,000 shares. I am discussing in terms of quantity. 6,000 shares. And second is this girl, Aarti Gupta. Always, giving me, believe me, I again tell you, this place where she sits, I am the only person who has access to her expressions. If given a choice, bro, she won't let me complete my syllabus also. Now, unfortunately, her plans have, faltered because she had made arrangements. She had already planned my last lecture and she had already given contract, but those guys were going to come here. Now, if by chance we are relocating, so now she will have to again contract the contract killer. Bola nahi, come there. Or bro, we still have 2-3 days at this classroom, so maybe she will do in the next 2-3 days only. I'll tell you the reason why. She holds 4,000 shares in the company. And this is the total issued capital of the company. The total issued capital is 10,000 shares. I am a subscriber of, holder of, owner of 6,000 shares. She is holder of, owner of 4,000 shares, which means our current equity distribution split in the company is 60-40, which means that I take all the decisions. My vote is majority vote. Every time she is coming with something sensible, she does not, you guys know her, but every time she is trying to make her money, I don't take her seriously at all. All decisions she is imposing upon me, and I am imposing upon her. I don't let her take any decision despite being a good amount of, shares. 40% she is only. She's always angry, always upset. So what do I do? Idea. Let me do one thing. I will do a further issue of 90,000 shares. And I will take all those 90,000 shares. That will change our holding percentage from 60-40 to 6 and 94. Now she will become the majority shareholder. And now when I will try to give my opinion, she'll take revenge. But if a further issue of shares is distributed in an illogical manner like this is going to change the proportion of holding and the voting power, and that can create trouble in the company, which is why company law is very, very clear. This is the logic in the company law, that whenever there is any further issue, any kind of further issue, by the way, further issue can also be of two types. It can be a bonus issue. Bonus issue is free of cost. or it can be something called a, by the way, bonus we have already discussed in the previous point number 4. Rights issue, the difference is that rights are paid. Means company wants more shares, so company is issuing more shares. In bonus, company is giving free shares by distributing the profits, but in rights you will have to pay for it. It may be concessional vis-a-vis the market price, but the main point is you will have to pay. See, I am not actually discussing with you that at what price it will come in the market and what price it is coming in the rights. My comparison is two types of issue, bonus and rights, where even if you are existing shareholder, bonus is free, right shares are not free. But the main point here is whether bonus or rights, they both have to be offered to your existing shareholders. Any kind of further issue has to be first given to the existing shareholders, SS and AG. Bro, that is not what I want you all to understand. The main thing is this has to be done in their ratio of existing holding. In their ratio of holding, it has to be offered. So by chance, if the further issue is 90,000 shares, so we have to offer these 90,000 shares to the existing shareholders in the ratio of 60-40, which makes it 54,000 and 36,000, which will effectively make the voting percentage after the issue also same as before. We will still stick to 60-40 ka breakup. See, original was 60-40, new is 60-40. That means now the total also check kar. 6,000 has become 60,000 and 4,000 becomes 40,000. 10,000 ka distribution percentage is same as 1 lakh shares ka distribution percentage. With this, she will not she will not be able to dilute my ownership and change what is happening in the company. If we start permitting minority shareholders to acquire the major chunk of future issues, minority will become majority and start dictating the company, which is not acceptable under Companies Act. We can't compromise your percentage by new issues, and thus this in Companies Act is called a preemptive right. You must have heard this term in Companies Act. The existing shareholders have got a preemptive right over every further issue. That is, they will get that in their proportion of holding. So if by chance we come up with a new issue of 90,000 shares, it has to be given to us in the same ratio, 54,000 and 36, that is 60-40. Correct? Hai? But what are the two ways in which this 90,000 can be issued? Let's understand. If this 90,000 is bonus, then you and me will not discuss. Let us not waste our time in discussing that, sir, will I take those 54,000 shares? Will she take those 36,000 shares? Simple question. If you are getting something free, will you take it? If it is free, no, everyone will take it. Just imagine if I today make an announcement that handwritten book, the most sought after book of this subject across the country, I am bringing and making a free distribution to everyone. Sir, I want, sir. Can you give your list of names, contact numbers, etc., postal addresses? I will deliver it free of cost at your house. So immediately everyone will. Some are already tearing the double sheet. Chalo, start writing the names. But the moment I say that's not an inter ka book, final when you come, I will give it to you because it's a promise. Inter, I can give only the books that I have promised at inter. They are also expensive, but we are managing. Your main target here is to impart the education and get those results out of you, that one fine day people do realize that marketing gimmicks or branding and valuation is not coaching. Coaching is about teaching, and we want to keep doing it. There is the power of not giving up. No, is believe me, crazy it is. If you decide that come what may, I will not give up, then all the threats and all those things, you won't be able to do anything, because not all, but some students are extremely loyal, sir. Come what may, sir. Whether you have a classroom, you don't have a classroom, you are teaching at a railway station also, sir, we will learn from you. At least some. I am not saying all. Everyone is with me. So if the shares are, see, I am not doing any free distribution. I'm giving an example. Okay. मतलब in case it was not clear, I am only giving an example. Best that I can do for you is, someone like, हाँ sir बताओ ना. I can tell the team to generate a special coupon code which will be shared only with you guys, and you can avail the possible amount of concession in case you are interested. Is the best that I can do for you, and I insist on coupon code mainly because it is an automated process. When purchased from the website, the email goes to the admin team. Admin team will send that email to the dispatch team. Dispatch team will take one envelope, write your name, address, contact number, everything, put your book in an envelope and send it. If I do it on one to summer like sir, discounted amount can be GPay to you. If you do it to me and I forget, see, I have to also activate the dispatch team. So if you go through that process, it will be faster. You do a GPay to me right now. That's exciting. Wow, I'm getting immediately. The point is that if I spend 2 days in telling the dispatch team, so the time taken to deliver will increase. So correct process is always through the website, because there are some people always online continuously checking. We have, with the grace of God, so much traffic on the website that people have to be continuously available on the website, on WhatsApp, to reply to people, because once we see, we activate the team immediately, because by the time the first communication goes, maybe there is another order in the pipeline. So we have to continuously do this. Website is the best channel. You are in the process, in the system. A coupon code I will share with you. You don't give it to others. नहीं, first decide if you're, sir, एक बार coupon code बताओ, then we will see whether we have to. नहीं, ऐसा नहीं होता. If you want, then you tell me, because validity of the coupon code we always keep only 24 hours. मैं तो ऐसा नहीं कि ठीक है sir, you create the coupon code, I will see if I want it. But there has to be some value of the coupon. No, it's immediate or sorry, take it now or regret later. So in case double digit students are interested, so let me know. Convince each other, no bro. अभी थोड़ा ये fee concession we are doing, तो थोड़ा तो you should also convince each other, no. Okay. हाँ, in fact I can do one more thing. If genuinely double digit students are interested, then probably I can tell the vendor to, because he has delivered your books, so he knows the address and he is close to that branch of ours. So he always delivers books over there, and from there the books are brought by our staff. So then, as we are aware that maybe we are moving to that other branch, so maybe that will come physically over there only. If that also you want, you let me know. Nahi, because when it is paid, no, people will think, nahi sir, I think I will manage with these 2 books. If I sell solve these many questions also, no, that much is also enough, sir. That's the, I'm not doing any kind of marketing. I am horrible at it. If by chance I had little idea of what marketing is, I know that I am better in my subject than most others. But the only thing that I don't know is marketing. I always thought that my students will work as my brand ambassadors and do marketing for me. Bro, तेरा खून कब खोलेगा फैजल? When? You know that meme or no? Faisal, Gangs of Wasipur. When will you learn that we have to do some marketing? I always thought that you will do it, but you are not doing it, and I am horrible at it. This was an example to make you understand the human tendency of having something free and having something paid. If these 90,000 shares are offered free to us, 54 and 36 ka ratio, you understood? So everyone will take, no bro. But if they are rights, still I will get offer of 54 and 36. But this time the difference is I have to pay for 54, she has to pay for 36. And when it comes to paying, see, when I am getting free now, I will say, yes, I don't want to dilute my control. I am getting free now. Yes, sir, I will be able to revise very nicely from that book. Free, no? But if it is paid, it's okay if my control gets diluted. What will happen? I don't want too much exposure in one particular company. When it is paid, no, sir, we will manage from these 2 books. That's the difference in human tendency. Human tendency. You understand what is happening here? So what are the two options here? If it is rights, either I will take, yes sir, I want it, or I will not take it. Well, no sir, it's okay. See, come here. Now, forget bonus wala part. See, one thing is very clear. Two things are very clear. New issue will be given to existing shareholders in their ratio for keeping the same percentage. And second thing which is clear, if it is bonus, everyone will take. Topic is over. Cost of bonus, we have already discussed. We are not discussing that. We are discussing a case where these 54 and 36 are paid shares. We call them rights issue. We have to pay. It may be less than market value, but we have to pay. And when it is paid, there is a question, I will buy or I will not. If I buy, so I fall here. And if I don't buy, I fall here. Do you understand or do you know that company law, to take this call, to take this decision, grants me a period of 2 months. In 2 months, you have to communicate to the company, yes sir, I want the shares. No sir, I don't want the share. And during those 2 months, you can't be like announcing rights issue in the morning and tell the shareholders communicate by evening, otherwise we will sell to others. You understand or no? So company law will give me how much time? 2 months ka time. During those 2 months, now think about it as the mentality of the existing shareholder. That is me and her, existing shareholders. Can we go and actually acquire? Can we tell the company I want the shares? That means I will have to pay for it. Everyone agrees. I will have to pay for it. That's my question. Cost of right shares for existing shareholder. This is my question. This is my question number 6. If I take, that means I will have to pay the company. And what is my cost of acquisition? The actual amount paid to company. Is this an actual cost? Not a special case? And I at the beginning itself told you that if you understand point 6, then you will understand 7 and 8, because somewhere 7 and 8 are hidden here. Somewhere 7 and 8 are hidden here, and for that everyone has to now focus on the right side. Can the existing shareholder refuse? Well, it's okay if my control gets diluted, but I don't want further exposure, because paid, no, I don't want further exposure. When the existing shareholder says I want it, so the company has to give it to the existing shareholder. Then this case will apply. Only when the existing shareholder says I don't want it, company can give it to an outsider. Who were the existing shareholders? Me and Aarti. Did the company offer the shares to us in our existing ratio? Hitesh is an outsider. He knows that company is coming up with 90,000 issue. He wants to become shareholder. Every day he goes to the company and requests, please give me shares. No, please. Company, outsiders not allowed up to a period of 2 months. See, after 2 months, if Aarti or myself, we don't give any communication, that means we have lost our right. Now, company can sell it to whomsoever it wants, but first 2 months only we can decide. So during those 2 months, can the company sell the shares to Hitesh, to any outsider? Everyone understands no. Here, Aarti and me, the existing shareholders, have an opportunity of making some gain. Is everyone is something that everyone should pay attention to. We have an opportunity. Hitesh is desperate to get these shares, but it all depends on whether I take or no, or Aarti takes or no. If we take, the topic is over. We have become the shareholders, so there is no share left for Hitesh, and this is our cost of acquisition. But Hitesh is coming and asking me, sir, you are eligible for how many shares? 54,000. Are you going to buy? I said I may or may not buy. I am still thinking. So Hitesh says, sir, if you don't buy, can I buy on your behalf? During those 2 months, the existing shareholders have got preemptive right. Understand them. If I say I want, company has to give it to me. If I say I don't want, then company is free to do whatever it wants. But if I say, listen, this is my third option. This is my third option. If I am not taking, I have a third option. Listen, if I surrender my right, renounce my right in favor of Hitesh, but I have this facility only for 2 months. If 2 months get over, company can do whatever it wants. If I tell the company that I am hereby appointing Hitesh, who will come and take these shares from you on my behalf, and you have to pay for it. See, it is a paid issue. I was also going to pay, but you can't directly go to the company. You can go only if you have authority given from me. I hereby authorize Hitesh to buy the shares on my behalf. That means I have renounced my right in favor of Hitesh. Do you understand? When I do not take the new shares, I have one more option. Option is to renounce in favor of an outsider, which is possible only if I don't take. Listen, if I take, then I have taken the shares. Then outsider does not have any shares. But when I am not going to take, I have an option. Sir, what is my option? Renounce in favor of Hitesh, outsider. Hitesh, bro, just to let you know, I belong to the Marwadi community. You are aware? Bro, to write your name on that piece of paper, no. You want to guess? I am going to take some money to renounce my right in your favor. The most complicated aspect of this whole discussion, everyone focus. Hitesh, if I write your name, will the company sell shares to you? Paid, but you will get priority because I wrote your name. To write your name for those 54. See, I can write for only 54. Aarti would have written only for 36. So I am talking about myself. For 54,000 shares, which I am allowed to buy, I permit you to go and buy on my behalf. And for those shares, for buying those shares, company will take the normal price. But to get the right from me, you have to pay me also some money to write your name. I will charge some money. Ladies and gentlemen, listen carefully. I am not selling my original shares to Hitesh. They are still with me, my 6,000 shares. I am not selling. This is the mistake which students make. I am not selling 54,000 shares to him. I am giving my right to him. Now he will go and buy those 54,000 shares. Matlab day one, he will only be the owner. So am I selling my original shares? No. Am I selling the rights shares? No, that he is going to go and buy now. I am selling my right to buy the shares. He will go and buy. What am I selling? Right. Is he paying me for it? That is a capital asset. Think about it. Right is not excluded. No. So do I have capital gains? Selling price will be what Hitesh paid me for favoring him. What is cost? That is my question number 7. Whenever I renounce my right in favor of someone, what is cost of? Listen, bro, this mistake I don't want. Have I sold my original shares? Have I sold rights shares? No, I have sold right to buy. So you can call it cost of right, cost of the right to buy, cost of the right entitlement. You understand? Cost of the right entitlement. First of all, is the selling of right entitlement in favor of Hitesh resulting in capital gain? Yes, because it's a capital asset and he is paying me for it. Now the amount which Hitesh pays me, please understand, is selling price. I don't want you to make a mistake. Is selling price. After he pays me, what is his next step? Take that authority letter, go to the company, pay whatever the company wants, which company was going to take from me also, and get his share. That we will discuss later. That's my point 8. My point 7 is, do I have capital gain when I renounce my right? Yes. Selling price will be what? What Hitesh pays. Actual selling price, no? So not a special case. What will be the cost? Is my question. Full chronology of events I will tell you. Once upon a time I purchased the shares, 6,000. I still have those shares. So that cost of acquisition I have incurred, but that deduction I will get when I sell my original shares. Those shares are with me only. Some years later, company comes with a new issue. If it was bonus, I would have taken it. I'm not discussing it. It is rights. So I am in two minds. I take or I don't. If I take 0.6, then actual cost. But if I don't, company can sell to outsider after 2 months. During 2 months, I can write your name and give. And I wrote his name and give. So company has to sell it to him. For writing his name, I have taken money. I am not selling any shares. Original are with me, and new he will go and buy from the company. I am selling the right to buy. Selling price is what he paid me. What is the cost of acquisition of right? Answer. Capital gain means logic. Whatever you think, you speak. At least try. Let it be wrong. Of what? Of the 54,000 shares, FMV. Think about it. If the share by chance is available at a price of 100, correct? Eh? So Hitesh will go and buy the share from the company at 100. Correct? Eh? So he is not going to pay me that much. You think that only for getting the right you will pay almost equal to the share ka cost will become double? And if he is not going to pay me this much as selling price also, then how can that become cost of acquisition? He will maximum pay me what, 100k share ka, he will pay me 10 rupees. When selling price is 10 rupees, then how can cost be 100? Give me a better answer. Why? There is no cost of right. When I purchased my 6,000 shares, I got the right free. Think about it. The cost of 6,000 will be deducted. When I sell those 6,000, they are still with me. Have I paid anything extra for the right? No. In Companies Act, we say the right comes embedded with the original share, attached to the original share, free of cost with the original share. I have paid cost for original share. I have not paid anything extra for the right. Capital gains means only logic. You think you have to learn all this? No. You do not have to learn all this. Your friend disagreed with me in such a big level that no, her college friends told her that capital gain you have to memorize everything. Then in first two lectures I proved that you don't have to memorize, you have to understand. She's like, no, sir is not working according to me. So she stopped coming on. She's still doing CA. Achha, she was talking about someone had a thank you. Or anything further. She's bringing something Kandi Peda from Satara. नहीं कोकण है ठीक है तो कोकण में व्हाट डू यू गेट राइस मच्छी तो आई डोंट ईट आई एम वेजिटेरियन क्या मिलता है आम मैंगोज मैंगोज आर रत्नागिरी नो रत्नागिरी इज कोकण एब्सोल्यूट साउथ ऑफ कोकण नहीं ब्रो आई डोंट वांट एनीथिंग people are actually participating in Maharashtra geography discussion. The geographical lecture is not going on. Now start saying, हाँ sir, Konkan has more rainfall than any other region. हाँ, densely populated. हो गया? Now focus on काम धंधा. Capital gain does not require you to learn anything. I am trying my level best to extract answers from you. And by the end, you realize that if I would have thought with little common sense, I would have probably got the correct answer as well. It only requires common sense. The right came absolutely free. So cost of right is 0. But everyone understood now? I will accept your answer that everyone understood only if you give me the correct answer to point 8, and this everyone has to give. Point 8 is basically conclusion of this story. If you are claiming that you have understood 6 and 7, if existing shareholder will buy 0.6 actual cost, if we will renounce the sale of right and not shares to 0 cost. In this story, if anyone gives me the correct answer to the third question, point 8, then I will understand that you are really understanding point 6 and 7. Cost of rights, share this time for outsider. Remember Hitesh the outsider? He went and purchased the share from the company because I renounced my right in his favor. Today he is acquiring the share. Correct or no? By taking authority from me and then getting the share from the company. He is getting the share. Today there is no capital gain, but someday there will be capital gain. On that day, what will be Hitesh ka cost of acquisition is the question. If I would have taken, then I would have, the existing shareholder would have been in 0.6 and the existing cost, actual cost. But for Hitesh, what will be the cost? If you give me the correct answer, then only you understood 0.6 and 7. And believe me, if you have slight common sense, it is very easy. FMV, no. As an inside shareholder, I get the share only by paying one amount, by paying the amount to the company. But the outsider got the share from the company by paying two amounts. What are those two amounts? Come on. Amount paid to first company name. Amount paid to, I'll explain. I know you have understood, but in words, existing shareholder for availing the right. With this, he has the face to go and talk to the company. And then finally, come on, complete this. Amount paid to company for. Clear hai? No confusion. Amount paid to existing shareholder for right and amount paid to company for share. Everyone is clear? Next. Cost of sweat equity shares. Sweat equity shares are also known as ESOP. You are aware of this concept. I think we also happen to discuss this in income from salary chapter. Cost of sweat equity shares. Cost of ESOP. Everyone is with me, bro. Hello. Supposingly, what is sweat equity? You should be aware. Supposingly, a share is available in the market at rupees 1 lakh. So if our company, the employee goes and purchases from the market, he will have to pay 1 lakh. But we are allowing the employee to buy this share directly from the company at actual cost of 10,000. Matlab, supposingly, me employer, you employee. Don't be offended. Example. Me employer, you employee. You want me to be the employee? Nahi chalega na? Thank you. So I am telling you, listen, this is the company share at the market. In the market, you will have to buy it at 1 lakh. But because you are employee and we want to give you sweat equity, that means sweat equity itself means concessional price. You just pay 10,000 and get the share. So 1 lakh ka share you are getting at 10,000. Everyone is with me? Right now there is no capital gain. Now capital gain will come when? If this share is sold. Example, at a price of rupees 1.5 lakh. So at that time, will there be capital gain? Correct? Hai? What will you take as sale consideration? Very easy. The actual selling price of 1 lakh 50. What will you take as cost? Or till 22 July, you might have to take index cost also. Ladies and gentlemen, this is my capital gain. Please understand, this is the answer and this is the question. What I write here, I hope you are understanding, is the answer to this question. What is cost of sweat equity shares? I know some are wondering, sir, ये क्या question है? What nonsense you are asking? How much I paid for the share? Everyone agrees 10,000. So sir, I paid 10,000. तो answer क्या question you are asking? 10,000 or 1 lakh are the only two options that I am giving you. And don't think 1 lakh only because, sir, it can't be so obvious, sir. It can't be 10,000, sir. If it was 10,000, then it would have been normal meaning, not special. So therefore, it has to be 1 lakh only. But that's the reason. No, give me reason. You all understood the question. I have paid 10,000 for a share worth 1 lakh. My cost is 10. No? Show me your hand. Show me your hand. Put it in your pocket and check from your pocket how much money went out for ownership. Check kar 10,000. So what is cost of acquisition? Everyone understood the question? You're ready with the answer? Those who think the answer will be 10,000 because that is my cost will unmute themselves and loudly shout 10,000. Now. Loudly shout. Neighboring class should get disturbed.
10,000.
10,000. Those who think the answer will be 1 lakh will unmute themselves and loudly shout 1 lakh. Now.
1 lakh.
Excellent. One more. Second trial. Second attempt. Those who think 10,000 now.
10,000.
Those who think 1 lakh now.
1 lakh.
Those who think that they have come in a Bharat procession to. Bola sir, music. Pa, 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 pa. 10,000 ka reason is, sir, that is my cost. What kind of a question is this? Let me understand your reason. Is that the reason? Because more students are saying 1 lakh despite knowing that the cost that I incurred was 10,000. So you have to give me a very strong reason. Who is ready to give any reason? Because you are clearly loud in your answer. But just, sir, go by the flow. Majority wins. Audience poll. नहीं. बोलो. Reason though, give reason. Why 1 lakh? But sir, gut feeling that special case, so 10,000 can't be the answer. Correct. हाँ. Agar? What do you mean by agar? If I was not in CA, I would have been an engineer or doctor. Ultimately, you are in CA, no? Sir, agar I was not in CA, no, I would have been a doctor. Arre, but right now, where are you? CA, no? So ultimately, you paid 10,000. You understand? Sir, if he was not an employee from the market, he would have purchased. But if he is an employee and he purchased at 10,000, so
for the company it is cost.
For the company it is cost. How?
So because the company is selling.
Company is not selling only. Company is just allotting.
To employee at cost, but if it would have been given to outside the company, would have given at 1 lakh.
Sale consideration is not fair market value. It is actual selling price. I would have sold it at 120, 110, any lower price also. Yeah, offer the coffee date anyone? For the correct reason, huh? अभी answer तो random guess से भी you can give 10,000 or 1 lakh. One of them is correct. I have not yet given the correct answer. हाँ. For the correct reason. Coffee date anyone? हाँ. बोल. Why? He paid in form of hard work. But then that way, Google also became a famous brand by doing hard work. We did not take that cost now in self-generated asset. So the answer I don't know. I have not yet given the correct answer, but the reason is certainly not correct. And by chance reason was correct only, no, I would have sent a teacup ka emoji maximum. Bro, what else could I do? Anyway, Google Pay. Bro, I don't want to. It is, see, now then if you don't understand the whole idea here, agreeing for the tea, coffee or anything, it is not about the monetary part. It is like celebrating our education together. It is like, yes, together we are learning also and having fun also. So don't bring Google Pay and QR and all this in between the discussion. If you want to give, then it's okay. How? See, the moment I say coffee date, any kind of date, the first person to get activated. Wrong answer. Last 10 seconds. Because after giving offers, you can't be giving so much time. It has to be quick. Grab it before the opportunity goes. If I tell, by the way, that does not merit any offer, therefore I didn't give in the beginning. Because the reason, if I will give, you will want to, I am not doing it to myself because thankfully my hair is properly set. So if I actually karu kya aise, you would want to, hold yourself like this and hit yourself. You would want to tell the person sitting next to you, slap me, no, please slap me. I said, just imagine, tearing each other's hair apart. Son, pagal, is going to be your reaction when I tell you the reason why the answer is FMV at the time of allotment, which in our example is 1 lakh. Some are like, oh, if my answer was right. Reason is going to make you really, really upset with yourself. You'll be in anger. What was the market price of the share? At what price employee got it? That means on the market price of the share, the company has given him a concession of taxable perquisite 90,000. Oh, lagi na? Hit yourself. He has already paid tax on that 90,000 the moment the allotment took place. And thus he will now pay tax only on the balance 50,000. Reasons you all give? He is contributing through hard work. Company is making provision. Sir, for the company it's a cost. Sir, we have to. अगर वो employee नहीं होता तो he would have purchased from the market at. No, bro. He got 10,000 में share worth 1 lakh at 10,000. He has paid tax on 90,000 on that day. Taxable perquisite. Whenever your employer provides you any kind of benefit, monetary or non-monetary, you have to pay the tax. It is like share of 1 lakh minus the recovery of 10,000. 90 is taxable. Is 90 already taxed? Now understand. His total gain is 140. Everyone agrees. Paid 10, got 150. Out of 140, taxable perquisite already 90, and therefore pay tax only on balance 50. Now how to get 50 here? By minusing 1 lakh. And we know this. If we have paid tax till this value, so this only becomes cost in future. At least agree to the fact that, sir, after knowing the answer, I really am very, very upset with myself, want to hit myself. You agree at least with, then hit no. Shall I do the honors? Ek baar, please. Ek. Please, once. This generation needs awakening. I know that, today's times, modern days, Gen Z, 21st century, you can't be hitting students. But we were strong students, good students. We became physically, mentally, educationally strong only because we had teachers whom we knew if little indiscipline, they will hit us. Not get angry. See the hitters. I am so surprised to see this diluted version here. Give the test. Man. In our times, it was that. Give the test. Bro, you have seen a really, really diluted version of it. You have got no idea. No idea what he was 2 decades ago. Young blood. Believe me, 10 years ago, I was also like that only. But as we age, we're like, Chodna, Baba, you also take 1 day off, I also take 1 day off. Let's relax together. Chodna. Forget the classroom. Chodna. As we age, we slowly and gradually calm down. And coincidentally, both of us are blood pressure patients. So we keep on telling each other, it's okay. Calm down. Chod. Hello. But believe me, this was a situation where you yourself want to hit yourself. At least agree with that. You all understood why? Because you forgot taxable, perquisite. Everyone is clear. Chalo. I expect you to give me the correct answer now. Cost of. No. If you have understood point 9, then you will be able to give the answer. Cost of an asset which was received as taxable gift. Cost of an asset which was received as a taxable gift. Now, then you may not understand the point completely, because which gift is taxable, which gift is exempt. We have full IFOS chapter. If this is the size of income from other sources, actually this is IFOS and this is gift. 50% of IFOS is gift. If I take 2 lectures in IFOS, 1 lecture is IFOS, other lecture is only gift, which is part of IFOS, taxable under section 56 only. But gift is 50%, and maximum exam questions also come on gift part. So full IFOS ka chapter will explain to you what is taxable gift, what is not taxable gift. Certain gifts are taxable, certain gifts are not taxable. Correct? Hai? So when you receive an asset which was taxable gift, future mein you will sell it. At that time, what will be your capital gain? Let us understand. Supposingly, so now we are assuming that you know which are taxable gifts. This is a taxable gift. Assuming you have studied IFRS, only the capital gain part. Supposingly, there is an asset, the fair market value is rupees 1 lakh. Now, if someone gives you this asset free of cost, is that a gift? Not a difficult thing. People do understand anything that I receive free of cost is a gift. But the exam question is not going to do or not going to be so simple. This is Chartered Accountancy. They are going to twist this question and they will say, this asset was purchased by you at a cost price of 10,000. So what is the market price? 1 lakh. You have purchased at price of 10,000. First question is not about capital gain. First question is received as gift. So is it taxable or not taxable? But when students are said, calculate the taxable gift here, students make one crazy mistake. They're like, sir, this is purchase. This asset is not received as gift, sir. This is, so how can purchase be your gift? Gadeda, you have made a very, very big mistake. I'll explain how. Have you stepped on a banana peel ever? You just did it. This word purchase has been strategically put in your question paper. Because the moment you see the word purchase, you're like, purchase! Sir, it looks purchase, but it is a taxable gift. It looks purchase, but it is a taxable gift. Sir, why? Supposingly you have 10 lakh jewelry, you give me free of cost. Or 1 lakh ka example I take. Fair market value. 1 lakh jewelry, you give me free of cost. Is that gift worth 1 lakh? If you take 10,000 from me, it is still gift. It is still gift worth 90,000. 90. Why, sir? Because I have paid, same as recovered in perquisite. 1 lakh free to 1 lakh. And for 1 lakh, if you pay 10,000, is it still a 90,000 worth gift? Do not fall for that word. Which word? Purchase nahi. Purchase. Do not fall for that word. Practice karna ghar jaake. You know, suddenly out of nowhere, as kids when we used to walk at public places, we used to practice Zahir Khan's bowling action. Despite being a right-hander, I actually have practiced many times Irfan Pathan. Oh, one hand he used to take behind. We did that. Which other bowler? Sean Polo kaise practice ki? McGrath was very difficult. Tumne kaun sa which bowler you saw in there? Malinga we have all practiced. Yes, I have also. Bro, same generation. Now you have grown up. So now you don't practice bowling actions at public places. You do this practice. Purchase! Just imagine walking randomly on any street, crowded street, and suddenly out of nowhere, purchase! People will throw stones at you. You never know. She in her normal senses will also do it. Purchase! One day my batch will get over, but these are the things that you are going to miss. Not you, I know, but other people. These are the things which people will miss, as that famous comedian once said, yahi baatein to baad mein yaad rahe. Hai na? So ladies and gentlemen, is this still a gift worth 90,000? That means now everyone understands on this date itself there was taxable gift of rupees This time it is very easy. Please do not make a mistake. Now, if this asset is sold in future, example for rupees 1.5 lakh, will there be capital gain? Sale consideration to very easy. It will be the actual amount of 1,50,000. What are we going to take as your cost of acquisition or the index cost of acquisition is the question. And this is the answer. 90,000. FMV at the time of purchase. FMV at the time of acquisition. In our example, that is 1 lakh. And why, sir? Because 90 we have already paid tax. So, of course, gift is taxable or not taxable. For that, you will have to go and learn IFOF, of course. If the gift is taxable, I have paid tax on this 90, then I will take this as my cost. Let me also tell you, IFOS will certainly teach us, but if it is not a taxable gift, is that possible? Then we will take our concept of cost to the previous owner. Take inheritance in your mind and understand. You receive that asset free of cost, but at that time it is not taxable gift for you. IFOS says this inheritance is not a taxable gift. So when you sell, you take cost to the previous one. The first task is to decide at the time of receipt, is that a taxable gift or not a taxable? If it is a taxable gift, then we take FMV. If it is not a taxable gift, then we will take cost to the previous owner. Understood? Are understood? Point number 10, everyone. Fantastic. Let's go ahead. Point 11, the concept of amalgamation. Point 11, the concept of amalgamation. You all know what is amalgamation? So, I don't have to spend time in making you understand the meaning of amalgamation. I have to make you understand the tax treatment of amalgamation. Amalgamation is two becoming one. Okay, fantastic. Let us understand with the help of an example. There is a company A Limited. There is a company B Limited. Both of them merge, amalgamate to form a company called AB Limited. That means, do you understand there is going to be transfer of all their assets? There will be assets that will be transferred from. Now, please understand, in tax language, we call them predecessor and successor. In accounting language, we call them amalgamating company and amalgamated company. But to keep it simple in the classroom language, there will be asset transferred from old company to new company. Because we are merging, so all our assets will be handed over to the new company. Business purchase account debit. Hello. Correct. This is not a taxable transfer for the old company. Guess the reason. The old company is shutting down, liquidating, not getting anything in return. Therefore, do you understand no capital gain on old company? Now, where are all the assets? New company. If the new company sells the asset in future, is it possible that the new company has sold the asset in future? You want to guess what we will do? Capital gain will come, no? Selling price will be actual. What will be cost? Think about it. See, inheritance was an example. If you observe, what did I do? Any transaction which is not a taxable transfer, then at the time of future sale, we will take cost to the previous owner. Come back. Is this transaction from year to year not a taxable transfer? That means this gain, nobody has paid tax. So whenever now this company will sell the assets in future, we will take cost to the previous owner. We will take holding period of the previous owner. For indexation, as per act, we will take from this year, but as per Manjula Shah, we will take this year. You understand? That means whenever an amalgamation takes place and old companies transfer their assets to the new company, full concept of cost to the previous owner is applicable. No explanation required, which we have already completed. But amalgamation does not involve only the companies. There is a very, very important other category of assessee also who will get involved because of amalgamation, and that is the shareholder. This point 11 is being taught to you basically to keep in mind the shareholder. I don't have any point for companies for you because for companies 49(1) is applicable and nothing else is applicable. So whenever the old company will transfer, no capital gain, and whenever new company will transfer, previous owner will be applicable. Correct? Eh? The whole twist is about the shareholder shares. And of course, if I teach you tax treatment of shareholder of A Limited, you have common sense to understand that that is also the tax treatment of shareholder of B Limited. This treatment is treatment of all shareholders. What about shareholders? Let us understand. Mr. X was one of the shareholder here. He had acquired in A Limited 1000 shares at a price of 100 each. That means if I ask you what is the total cost that he paid to become shareholder in A Limited, 1 lakh. Everyone is with me? Understand the full story. I, Mr. X, I have gone and purchased shares in a company called A Limited. It could have been B Limited. I am explaining the common tax treatment of all the shareholders. I have purchased how many shares? 1000. Price per share 100. Total cost 1 lakh. 1 lakh. 1 lakh is the amount. 1 lakh, 1 lakh, 1 lakh, 1 lakh is the amount that I paid to become shareholder in the old company A Limited. Same thing someone must have paid also in the new company B Limited. These 1000 shares of mine are now a worthless piece of paper. Why? Why these 1000 shares are a total waste? Because the company is going to shut down due to amalgamation. So everyone agrees that these 1000 shares have become worthless due to amalgamation. So Mr. X, don't cry, bro. Don't cry. Because as purchase consideration, you understand the short form PC, purchase consideration, this much amalgamation you studied in accounts. The successor will pay it to the seller as purchase consideration. Mr. X will receive shares in the new company in AB Limited. Do you understand? Have you seen these adjustments in accounts also? That the shareholders of the old company will be allotted shares in the new company, and there will be an exchange ratio that will be determined at that time. It is not necessary that you have 1000 shares here, so you'll get 1000 shares here, because the market price of these shares and these shares may be different. The whole idea of amalgamation, everyone please pay attention. The whole idea of amalgamation is that we have to give you shares here of the same value as the value of these shares. We don't have to match the number. We have to match the value, and thus the exchange ratio can be anything. Can it be like 2 for 5 held? And I think if you have studied amalgamation in accounts, there is a range of adjustments that you have solved on this. It can be 1 for 1 held if the market price is equal, but mostly it won't be 1 for 1 held, 2 for 5 held to match the value. So do you understand? Mr. X, in exchange of his 1000 shares of A Limited, will get how many shares in AB Limited? And every shareholder will get. If the ratio is 2 for 5 held, how many shares he will get? Do you understand? He will get 400 shares in AB Limited. Everyone is with me? So understand the life of Mr. X. He has what? 1000 of A Limited now getting converted into 400 of AB Limited. Correct or no? Are these shares becoming worthless? He is getting this to match that loss. Hello? The value, I don't think before he had 1000, now he has only 400 loss. No, sir. The value of this 400 will be same as the value of those 1000. So do you understand? We won't let him suffer any loss. First of all, it looks like a case of barter, doesn't it? Against 1000 shares of A Limited, I am getting 400 shares of AB Limited. But also understand, this is also not a TT. Therefore, there will be no capital gain at the time of this. And why there cannot be any capital gain? Come on, use your common sense. I want you to participate in this. Mr. X is getting in exchange of 1000 in A, 400 in AB. Why is it not a taxable transfer? Sir, exchange is a taxable transfer. No. Barter is a taxable transfer. No. Sir, then why are you excluding this? Come on, use your common sense. The value of those shares is same. There is no gain. He is not going to get anything extra. Even if you make it selling price, make it taxable transfer, the value of these shares will be same as the value of these shares. In reality, there is no gain. And one more thing you understand, that this exchange the transaction was not something done by Mr. X. It was a company level decision. I want to stay as it is the shareholder. Correct or no? So right now there will be no capital gain. Is that clear? Now do you realize that the old companies are gone and Mr. X is left with what? 400 of AB. Correct hai? If these shares are ever sold in future, will there be capital gains? Future mein these 400 will be sold, no? So understand the story. I was shareholder here, but as PC I get here. This exchange is not a TT because value will be same. But when I now sell these shares, will there be capital gain? Sale consideration, actual. The question is, what will be cost or index cost? Because this will give me the answer of my capital gain. And khali one hint I will give you, because bright students also make this mistake. Don't by mistake say previous owner, because please understand, these shares or these shares, there is no previous owner. The owner is Mr. X. The previous owner is incorrect. Previous owner is applicable to the company because new company is selling assets of old company. So company will be in the previous owner concept. But what about Mr. X? If you have understood the story, it's all about whether you understand. Capital gain does not require memory power. If you have understood, so what will be the cost in words? I purchased shares in an old company by paying an actual cost. But that company amalgamated with another company and therefore I got shares in the new company. At the time of exchange, I did not pay any tax on capital gain. In reality, there was no gain also. Capital gain, if at all, will arise when I will sell my new company shares. What will be the cost? It is no previous owner. I am only the owner. What will be the cost? Words machine. Amount that I paid in the old company. What is cost here? The amount paid, or you can also say the cost of acquisition in the old company is your answer. Now let me first write your question. Here I did not write the question. Look at the heading. I just wrote a transaction, a chapter, amalgamation. My question is, what is cost of acquisition of share in new company? This is what I have to decide. This is my question. And what is answer? Cost of acquisition of share in old company. And oh, logic, everyone with me. I paid some amount to get A Limited ka shares. Those shares are only converting into AB Limited ka shares. That means this cost basically becomes my cost of these shares. Because of these shares, I am getting these shares. No. So the cost over here will become my cost over there. You understood? Everyone. Amount paid in old company will become the cost of acquisition of the new company ka shares. Cost of acquisition in old company. This is the answer. Bro, I did not give the answer. Was this answer given by a student in the class itself? Come on, I told you, capital gain, all answers will come from the class. But then here I have to do some addition from my side also. See, the moment you get this feeling, sir, I think all the answers we are getting by ourselves only, sir. For that, no, all the explanation of how the process is working is also required. But there is one thing that you may probably go wrong in, and everyone pay attention. Are you taking amount paid in old company as cost in the new company? That is very logical, because that cost only is becoming this cost. But always take the total. Let me warn you, never take the per share cost. You know why? because the exchange ratio may not be same. So what will you do? Either I'll tell you what is the mistake. I told you what? Cost year will become cost year. Now some people make the mistake, sir, your cost was 100, so your cost is 100. Hey, pagal, your cost is 100. You take that 100, so you will do 400 shares into 140,000, but your cost was. So please understand, the total 1 lakh year will become total 1 lakh year. The migration has to be of total cost, of course. This 1 lakh was cost of 1000 shares. Now the same 1 lakh is cost of 400 shares. If I sell all 400, I will minus full 1 lakh. If I sell 200, then I will have to take COGS. Cost of only 200. If 400 ka cost is 1 lakh, so 200 ka cost will be 50,000. At the time of computing that capital gain, I will take deduction, yes, of course, of proportionate cost. But at the time of migrating the cost from old to new, don't migrate per share. Migration has to be of the total cost. Then deduction you take of whatever you are selling now from those 400. So you will take the total cost, but never the per share cost. This is one mistake which no one should be making, but I have seen a lot of students make this mistake. Please make sure that henceforth you are not making this mistake. Everyone is clear? And rest of it you understood only. Rest of it you understood. Everyone is clear? Shall we go ahead? Point number 12 and 13 will be done together. I'll frame the questions later. Like in amalgamation also, I framed the question last when I reached here. I now want to make you understand a transaction, a concept called demerger. Demerger is there in your account. If amalgamation is a wedding to becoming one, demerger is divorce. So demerger is not there in account syllabus of Inter. So first time when anyone in accounts will teach you demerger, no? It's the usual tendency of students. What do you think? Usual tendency of teachers. What do you think is demerger? Say divorce and say that I said it. You did that in audit? What is audit? Finding mistakes in others. Then you took my name.
Yes.
And then what was the reaction of your teacher? ये देख गलत है ठीक हाँ विचार के बाद independent examination of financial statement. Yeah. So then one more mistake. That is also an audit. Don't you think so? He's actually explaining the practical aspect of audit. कि ये गलत है. Don't do it like this. Do it only in your 12 to 4 का slot. He audited my statement. I said I am the owner of Adani Enterprises, Adani Wilmar. He will rectify. He will say no, you are a stakeholder. Bro, well, when you know each other for more than a decade, so you know who will speak what. Your audit sir may be 2-3 years junior to me, maybe more, but we are good friends. So we know how each other thinks, speaks. But at the end of the day, audit is finding mistakes in others. Let 12 to 4 is going on. 12 to 4 is going on, no? So now we can do it, no? One day both of us will come together. We'll keep this. 12 to 4. 4 to 4:30 we will do this. Lecture, audit tax. Tax audit. Something like that. Tax ka audit. And audit ka tax. Fantastic. Now then, ladies and gentlemen, what is the concept called demerger? Say, whenever your accounts teacher will ask you, say, sir, kya? Divorce. Sir, why do I call it a divorce? Please understand. With the help of an example. Supposingly, there is a company called Kingfisher Limited, the king of bad times. Kingfisher Limited, king of bad times was its slogan. Kingfisher had two businesses. One, an airline business. And two, A brewery business. English. Brewery. Alcohol. Bro, daru, tadi. Desi. Poha. Brewery. It was known as the UB Group, the United Breweries. Alcohol. Understand the range of business. One plane which never flew. And this, people fly without. Once you have this, bro, you don't need any wing. You fly. You talk only in English. Then you say, "Gaadi tera bhai chalai." On one hand, the airline business, always into losses, always into losses. Most good industrialists comment about Kingfisher Airlines that Kingfisher Airlines did not have business model, they had only model. They did not have business model, they had only model. So airline continuously suffering losses. On the other hand, brewery business, bro, this is the most profit making business in the world if you understand. Sale of alcohol is more profit making than any other activity. Believe me, even when the whole world is in losses, this is still profit making because recession everyone is free. So what to do? There is still boom here. When everywhere there is recession, there will be boom. When everywhere there is boom, still there will be boom here because people have disposable income. What to do? Understand every occasion of your life. You clear CA exam. Yes! Let's go for it. You don't clear CA exam. Let's go for it. The only thing constant is this. Supposingly, you ask her out. I am talking from my gender perspective, so it will be her only. Bro, if it is the female student, so you ask him out and then other options, permutations are available. You are free to take your own decisions. You ask her out. So I am talking from the male perspective. And she says yes. So yes, let's go. If she says no, let's go. The only constant is this. Let's go. Let's go. Now, nahi. You are told that do all this in 12 se 4. That does not mean that we open bottles here. Sir is strict with you in audit class? Then why he says do all the masti in 12 se 4? Then? Acha, that way. वो correct है. Likewise, I also told you, no? Depreciation is reduction in the value of asset due to wear and tear, constant use, passage of time. This you will remember in which slot? Which is that slot you decide that. In tax, we say owned and used. Of course, every subject has its own speciality. So finally, you understand, brewery is the most profit-making business. And believe me, one of the country's biggest ever Hindi literature poets, Shri Harivansh Rai Bachchan. Harivansh Rai Bachchan, father of Amitabh Bachchan. Amitabh Bachchan. By the way, a bigger celebrity than his son. Actually, Bachchan family characteristic is every descendant is less talented. Shri Harivansh Rai Bachchan wrote a poem on brewery considering its profit-making ability. And in the history of Hindi literature, that even today happens to be the most read and one of the most popular poetries ever. He wrote a poem called Madhushala. Madhushala is basically you in English may call it bar. He wrote a poem on that, and it is said that he was a non-drinker. But he understood the mentality of the human being. And human mentality he has written in his poem Madhushala. A poem which says alcohol reflects human life. Irshad? Bro, you won't understand. They are like, chalega. We'll enjoy the music here. He said, एक बरस में एक बार ही जलती होली की ज्वाला. होली, once in a year. और एक बार ही लगती बाजी जलते दीपों की माला. So, Deep Mala is Diwali. Holi Diwali happen how many times in a year? Once. दुनिया वालों किंतु किसी दिन आमदिरालय में देखो. So someday you come to the beer bar and see. दिन को होली रात दिवाली रोज मनाती मधुशाला. Mark the depth of the statement. In a bar, it is holy Diwali every day. Understand the depth that it is the most profit-making business in the whole world. He further continues and talks about human relations. This is explanatory. Matlab, you understand the few words here and there also. Then you will understand what is in the next paragraph here. He said, मुसलमान और हिंदू है दो एक मगर उनका प्याला. Very well understood. एक मगर उनका मदिरालय एक मगर उनकी हाला. दोनों रहते साथ न जब तक मंदिर मस्जिद में जाते. बैर बढ़ाते मंदिर मस्जिद मेल कराती मधुशाला. Mark the depth of the statement. That you will fight if you go to mandir masjid. Don't fight. Come to the bar. You like each other. Depth देखो. I have told you this is what increases friendships amongst people. And this, this poem has more than 60, 70, 80 paragraphs. But one of the last which I remember is that the poet is on his deathbed now. He is about to die. And from his deathbed, he is sending a message to his wife. So while lying on his deathbed, he is addressing his wife and writing this paragraph. मेरे अधड़ो, अधड़ो means your dead body. मेरे अधड़ों पे हो अंतिम वस्तु ना तुलसी द, मतलब don't put तुलसी का पत्ता on my dead body. और मेरी जिभवा, so even Mumbai students won't understand this. North Indians, Uttar Pradesh, Bihar side, tongue not tongue. Hindi they call it जीभ. Zaban is again Urdu. Hindi में जीभ, and North Indians call it जिभवा, tongue. मेरी जिभवा पे हो अंतिम वस्तु ना गंगा जल प्याला. So don't put tulsi patta on my dead body. Don't put ganga jal in my mouth when I am dying. Pran priye means he is referring to, as I said, to his wife. प्राण प्रिय यदि श्राद्ध करोगी मेरा तो ऐसे करना. पीने वालों को बुलवा कर खुलवा लेना मधुशाला. And I know your reaction is, sir, nice, sir, carry on till 4 o'clock because we have decided 12 to 4 slot is allocated. Sir, wow, one more, sir. No, bro, understand the depth. Alcohol reflects human life. It is, unfortunately mentally hammered in our brains that it is bad. Bro, within limit everything is good. And bro, if you cross limit, then even love is not good. Beyond limit, you should not love also. Then you miss them. Then what to do? They don't care also. Let's not get into that. क्या हुआ? Tax चालू, I know. Within limit, everything is good. Beyond limit, nothing is good, not even love. Do you agree? It is unfortunately hammered that alcohol is bad, but alcohol reflects. We have all at some point of time done it secretly. I know of households where two brothers both know that they are going, but one goes in this direction, another goes that. Supposingly, one is already at the restaurant. Other walks in. The younger one will get up and leave. Or if he has not seen the elder one sees, so he quietly leaves because he does not want awkwardness. Arey bro, you should actually be come now. Just imagine that if your brother will become your best friend if you do it together. Because you will share each other's problems. And each other is only the problem. So you tell, once you are in that zone, so you don't do all this, no, because of this happens or that happens. You automatically become logical. Bro, I know of people where parents, father and son and father and daughter sit together. And I am 100% sure, tax chalu, I know. I am 100% sure I am going to be a father like that. You don't need to search for company. Think about it. You ask your friends WhatsApp group. One is like, yeah, I will be late from work. Other is like, I have guest at home. Third says, I will come, but I will not have. Then why are you coming? Check करने के लिए, or to take me home. No, bro. I'll reach home. Don't worry. Just imagine if you and your children are open enough. Reach home and ask your child, क्या plan? बोला. And these days, so there are startups. I'll tell you of, there is an app called Living Liquids. Living Liquids, एक app है. They send home delivery. So the moment you and your child both are like, हाँ चलो, आज today done, home delivery. So that will be home delivered. And then for peanuts, etc., for snacks, you have your quick commerce, you have your Zepto, you have your Blinkit. What is 50C? You have Zepto, you have Blinkit. Then after the session, you need proper cooked food. You have Zomato, Swiggy. If you are open with your children in this regard, for everything is available at home, bro. You don't need to go anywhere for anything. So today's lecture, don't say sir, today's lecture we dedicated to alcohol lecture. The main thing that I want you to understand here is that alcohol will never suffer losses. But what is happening? One company is running both businesses. Now, this business is making profit. This business is suffering loss. The final net profit is becoming zero or maybe negative. We want investors to come and invest in our company. We want lenders to give us loans. They are saying this amount. We have to get an idea of why companies indulge in a concept called demerger. Demerger basically is a transaction where one of our businesses will be removed from our company, and for this business we will create a new company. Let us name that company as Kingfisher Airline Limited. So Kingfisher Limited will continue to do the brewery business. One of our businesses is handed over to another company. So what will happen? Even if it is a loss-making company, it will be this company that will look like a loss-making company. From today onwards, this company will look like a profit-making company because only brewery will show profits. So by the way, if airline is continuously suffering losses, one of the options is shut down also. But somewhere the company is hopeful. No, very soon we will be profit-making. So to give ourselves one last chance, maybe we are incorporating a separate company. Otherwise, we have the option of shutting it down also. That we'll discuss in one of the other concepts. But right now, we are giving ourselves one more chance. We will start our airline business in a separate company. It still is suffering losses, but now only here the losses are. All the profits are being booked by this company because only brewery business means profits. Is a main reason why lot of corporates, now happy? Is a main reason why a lot of corporates indulge in demerger. If I have to, Kingfisher was an example. Kingfisher did not shut down its airline. In fact, they sold some stake in their brewery business to revive their airline. Finally, they realized that nothing is happening. So Kingfisher was only to keep it entertaining, because I know that you get sir, 2 more paragraphs of Madhushala, please. At the end of the day, if you want a real life example, there is a company called ITC. Bro, if we have spoken about this, then we should speak about this also now. A photo le? Combo. That also comes on Zepto Q. Instamart Pay, it won't come, but there is another app called Instamart Lite. App Store or Play Store do not allow uploading or making such apps live. The Zepto Q or Instamart Live, you have to go to their website. From their website, you have to download a file called APK file. APK file? Application file. And that you have to install. First, there will be a warning that this is an unknown source. Do you want to install the app? Yes, bro. Because you can't download the app directly from Play Store. So Instamart Lite will deliver this also. देखो, general knowledge है, and you should have general knowledge of everything so that you can sit and have a conversation with anyone. Supposingly there is someone whom I want to strike a conversation with, the best idea is area of interest of her. Matlab, that person. If I want to strike a conversation, I have to talk about things that you find interesting, not those things which I find interesting. And therefore, you should have knowledge of talking, speaking on all topics. Is how I have got somewhat idea about the things that I am talking. End of the day, what are we trying to understand here? That this company called ITC, it had multiple businesses. It had FMCG, it had its cigarette company, and it had hotels. We right here in our area have one of the ITC, and ITC is a brand. Across the country, it has got hotels. But across the country, it is also the only cigarette manufacturing company. Across the country, ITC is the company which is manufacturing Classmate notebooks or Dark Fantasy biscuits or Fiyamaka soap. All these or Sunfeast, they are all ITC brands. Now they have recently demerged their hotel business by creating a new company called ITC Hotels Limited because they wanted to book it separately. Demerger can be done because we want to segregate the profits of our different businesses in different companies. Demerger means one company will split into two. If amalgamation is two companies becoming one, demerger is one company becoming two. In amalgamation, the old company, this is the most important data of the entire story. If you understand this part of the data, then only you will understand anything that is following hereafter. This is the most important data. If amalgamation, then the old companies will shut down, close down, everything has come and accumulated in the new company. In demerger, it is this company. A part of this company is getting removed, but this company at the other part still continues to exist. The old company is not going anywhere. The old company continues to exist in this form. Is the most important aspect in the entire story. And I will wait in the next few minutes, see if you make a mistake here. Everyone with me, please. There is a company called Kingfisher having two businesses, airlines and brewery. Because of the continuous losses of the airline business, they have decided to split it into a separate company so that we continue the profit-making company and the loss-making company separately. In the balance sheet of Kingfisher, earlier they must have recorded the airline column, the brewery column, and the total column. Correct or no? That means if the total assets of the company are 100, a portion will belong to the airline and a portion will belong to brewery. And now do you understand? All the assets of this column will be transferred. At this stage, we will have to take an example percentage of what is the split of this 100. Obviously, in real life, the balance sheet will tell you, in exam, the question will tell you. We are taking an example that out of the total assets of the company Kingfisher, what proportion belongs to the airline unit and what proportion belongs to the brewery unit. It is only an example. It can be 50, 50, 60, 40, 30, 70, anything. Let us say airline is 70% business or 70%, 60%, sorry, assets, and brewery is 40% assets. So the total assets are 100. Now, do you, with this example, this strictly an example of 60-40, do you agree? Do you understand this statement that Kingfisher has transferred 60% of its assets to the company Kingfisher Airlines? Do you understand? 60% assets are getting transferred to which company? This is not a taxable transfer. Why, sir? Because when these assets are being transferred to the new company, this new company is not paying anything to the old company. Therefore, there will be no capital gains on old company. Correct hai? You now want to guess if at all on these assets capital gain will come. It will come when and on whom? When Kingfisher Airlines sells. If sold in future by new company, will there be capital gain? Yes. What will be sale consideration? So I don't want to explain all this. I just want you to tell me the cost of acquisition. Once again, cost to the. So do you understand? This is same as amalgamation. Assets from company to company, no taxable transfer. Future sale by new company, cost to the previous owner. Company aspect, to be very honest, in amalgamation and demerger remains same, as except the fact that in amalgamation, companies are transferring all of their assets because old companies are shutting down, liquidating. But in demerger, the company will transfer only a proportion of its assets and continue to operate the balance proportion. In demerger, the old company is not going to close down, shut down, or liquidate. In fact, will this company also continue to exist? Just in case you want to know the accounting terminology. So, in accounts, this company is known as the demerged company, and this company is known as the resulting company. Demerged company and resulting company. This is the accounting terminology. This is the accounting terminology. Is the company aspect clear? Because I am going to the difficult aspect now. Is the meaning of demerger clear? One company will split into two. Old company will continue to operate at a reduced net worth. Why reduced? Because 60% of net worth in the example. 60% is transferred to 40% is retained. Correct? Hai? Actually, company angle I don't have to explain also. My explanation, will be with regard to whom? I want to explain with regard to the shareholder. One more time, we have a shareholder, Mr. X, who acquired 1,000 shares, where in Kingfisher Limited at a price of 100 each. So the total cost paid by the shareholder is rupees 1 lakh. And I was peacefully sitting as a shareholder of Kingfisher Limited by investing rupees 1 lakh. Everyone is with me. My 1 lakh this time is going to, last time my 1 lakh became totally worthless because the old company will go away. This time my 1 lakh will not be totally worthless. My 1 lakh is going to only fall in terms of value. Fall in terms of value. Will I still have shares here? Yes, I will, because the old company continues to exist is the main difference. Of course, but they will fall in value. Why? Because a major part of the business is transferred. But don't worry, as purchase consideration, here also you will be given shares in the new company. Obviously, this share that you will get will be in proportion to this fall, no? It won't be the value of your entire shares here. It will be only to the extent your value has fallen. The main difference between amalgamation is that in amalgamation, between amalgamation and this is, in amalgamation, this full thing has gone because company has gone. So full value ka I need PC. But in demerger, let me ask this. In demerger, originally I had how many shares? 1,000 shares. What percentage has been transferred by the company? 60%. So now I will be left with how many shares? 1,000 only. Shares are not going anywhere. But the 1,000 ka value will not be 1 lakh anymore. The value will fall to 40,000. Why 40? Because 60,000 worth, 60% worth assets are transferred. For that much fall, I will get shares. You understand? Can be any ratio. It can be 1 for 1 also, but can be any ratio. Supposingly, I get 2 for 5 held. So that means how many shares I will get in the new company? 400 in the new company, Kingfisher Airlines Limited. Everyone is understanding the chronology of events. Mr. X first acquired shares in Kingfisher. How many? 1,000 by paying 100 each. Total cost 1 lakh. These shares have not fallen in number. In amalgamation, they fall in number and value fully. In demerger, number remains same. Shares I still have because company is still there. Only their value falls and I will be compensated for that value. Of that much amount above, we will have to go and see what is the market price of the new company's share, and in that ratio we will allocate. Example is the ratio of 2 for 5 held. I want to know from you, what is the wealth of Mr. X now? Does he have shares in Kingfisher Limited? Kingfisher Airlines Limited? Okay, both of them. He has shares in both. Kingfisher Airlines, so we know that he has got. Kingfisher, he had acquired how much? 1,000. Now he has 1,000 only is the biggest mistake that you will make here. Now he has 1,000 shares. Wow! Magic! Before demerger, 1,000 shares. After demerger, 1,400 shares. Profit. These shares will fall in value and same value you will get here. So the total value remains same. Is that clear? This is a compensation for your fall in value. Now, obviously, right now when you are allocated the shares, there can't be capital gain. No. When will capital gain come? If these shares are sold. You understand which 1400 shares I have? I can sell any of them. Will there be capital gain? Sale consideration will be actual. What is going to be my cost of acquisition? And even if I do indexation, it will be before 23rd July till 22 July. That is correct. Obviously. Lekin first I will take cost and then I will index. So my target is not to give you definition of this. My target is to give you definition of cost. Once you know the cost, you know how to index. Once I get the two cost of acquisitions here, do you understand? I will also get my capital gain on both. Now, do you realize I have to write two costs? 1, 2, 2, bro. A question 12 and question 13. Two questions. You understood? In demerger, I have two cost of acquisition. One, I have cost of acquisition in the demerged company because that is still there, and the resulting company because that is newly created. Cost of 1000 and cost of 400. Sir, why in amalgamation we did not have this? Because amalgamation old company is going away. So we had only the new company left. But here we have to answer both. So can I say this? That for the old company, let me keep question number 12. And for the new company, let me keep question number 13. So what is my question number 12? What will be cost of acquisition of shares of demerged company, that is old company? I'll write the answer of question number 12 here and write in words here. And 13 is what is cost of acquisition of shares of resulting company? I will write the answer here and in words here. I have to now write answers to my question 12 and 13. I have to write answer to my question 12 and 13. You understand? I give you one hint. I am going to write something under demerged company, that is here, and something under resulting company, that is here. Whatever I write here, the total of the two has to be 1 lakh. This total cannot be 1 lakh and 1 rupee before indexation. Of course, after indexation, the figures do change. The total cannot be 99,999 because one thing everyone understands. Show me your hand, put it in your pocket, and check. You became shareholder here at a cost price of, happy no, now tax is going on. So you became shareholder at a cost price of 1 lakh. Total paid by you was 1 lakh. It has to be 1 lakh. It has to be 1 lakh. You take full 1 lakh here and 0 here, or you take full 1 lakh here and 0 here. I have got no problem. You give me any in between answer. But one thing I must tell you, that these two, the total has to be 1 lakh. It can't be anything else. I'll give you the various options. See, I paid in which company? This company. So take 1 lakh here. I did not pay anything here, so take 0. I'll give you another option. Like we did in amalgamation, the full cost was migrated because now we have the new company. So take full 1 lakh here, then this will become 0. Or give me any in between answer is capital gain. Logic is bigger than everything else. Provided you understand the transaction. Someone has to explain the full transaction to you. But my hint is very clear. The total has to be 1 lakh rupees. I have given you the two extremes, 1 lakh and 0, 0 and 1 lakh. I have given you the two ends. Or you want in between any answer, compromise answer? Go for it. Come on. $40 where and $60 where? Old company. There is a demerged company. Okay. 60 of course in the new company, Kingfisher Airlines. Is that the answer? There's one more answer which students have given me in the past. They say, sir, 1 lakh is the cost of 1400 shares. So they apportion in the ratio of 1400, which is wrong, because you don't have to do per cost or per share ka cost. Their values change. We have divided the wealth of the company on the basis of net worth. Ladies and gentlemen, it has to be done in the proportion of transfer. Absolutely correct. Capital gain. Capital gain, nothing is bigger than logic. So what is cost of acquisition of shares in demerged company? Now if you understand in words, I will take my original cost, multiply by the proportion retained. In our example, the retained proportion was 40%. And any guesses here in words? Original cost, this much I am helping you, into, come on, proportion lost transfer. It's not lost, no, you still own the other. So in amalgamation, two become one, migrate all your cost. But in demerger, one becomes two. So split your cost in the ratio of proportion of transfer. Everyone is clear on this? Absolutely clear on this? That was your point 12 and 13. So, and when I started demerger, I wrote 2 points 12 and 13. If there was confusion, now that confusion I hope is eliminated. You are clear? Clear? Fantastic. You want break today? You have lecture after me? Which lecture? Okay, 10 minutes ka break. Bhagwan. Hello. Okay. Let us go ahead. May 25. Correct, na? Confirm. Don't worry. September 25, Jan 26 also same syllabus. Section 50B, the concept of slump sale. We are learning the concept of slump sale for the first time. But still you know something about slump sale. Exemption. Kuch hai means what? What do you mean by kuch hai? Of what? Means what? Indexation benefit. You can't be acting like this in the classroom. One or two is speaking with zero confidence and the others are lost in their own bloody planet. You have got no bloody idea what is happening. You are not carrying your book number 2. If you don't want to take PGBP capital gain seriously, then stop coming to my class. If you don't understand that these 2 chapters will decide what you will score in tax, then don't come to my class. You have any sense? You have any sense when I told you that you have to carry your book number 2 on daily basis? You are not carrying it. And you are shameless that you are actually not answering question on capital gain. First of all, during PGBP capital gain, you should not be bunking lecture. And if you bunk lecture on the condition that, sir, I will watch on the same day, you should answer. And those who are attending also are not answering. So those who bunk are lecture, no problem. They attended, still they are not answering. In PGBP capital gain, if you don't have answers to questions, if you don't have answers to things that are taught, then you have already invited trouble. And this is January already. There is lots of time for me. Nahin. This is February. Thank you. Audit. Lots of time for me. Nahin. But there is lots of time for September. Your current behavior and habit is, I am warning you in advance. Remember on your result day, one sentence, it is your responsibility. Whatever be the result, you are responsible. You are responsible whether it will happen in the first time or multiple times. This behavior cannot be and will not be tolerated in my class. Absolutely not. How dare you not carry the book when I already told you that you have to? Section 50B, the concept of slump sale. Slump sale. There is something that I have told you about it. Now you remember, you don't remember, that is your problem, because my job is to ultimately come and teach you. is that slump sale is one of those cases where indexation was never going to be available. Now, once we learn the meaning of this transaction called a slump sale, we will also understand why that indexation is not available. The logic. Sir, what is this slump sale? Remember, we had this company called Kingfisher Limited, the king of bad times before the break. It had two businesses, airline business and brewery business. One business continues profits, other business continues losses. The profits are being wiped off because of those unnecessary losses. One option was separate this business and run in the name of a separate company owned by us only, Kingfisher Airlines. But we have realized that no point, and therefore we want to now get rid of this business. This company is doing what? Please understand. This company is transferring the entire business. Entire business means whatever are the assets and liabilities of the airline business, I am going to hand it over. I am not giving you the land, building, plant, machinery of the airline business. I am saying, listen, I will take from you rupees 10,000 crores and hand over my entire airline business to you. I am selling a capital asset that is a business. It can also, institute uses these words, sold the entire airline unit. Instead of saying business A, business B, they call it unit A, unit B. Sometimes institute also uses this word called undertaking. Airline undertaking, brewery undertaking. For example, in Mumbai, we have a company called Best that is doing electric supply business also and transport business also. So we call it electricity undertaking and the transport undertaking. You can call it two businesses. You can call them two units, or you can call them two undertaking. You may refer to them in any of these. Institute uses them interchangeably. Entire business, entire unit, entire undertaking. As a whole, I am selling my entire business in lump sum. I am not selling an individual asset. I am selling an entire business. Entire business. You understand? Keep the word slump in your brain. Slump. Kept. Remove S. What are you left with? Lump. Put the S in the end. That summarizes the concept. Lump sum sale of business. Slump sale of business. As a whole. Entire business. And in order for a transaction to fall in the definition of slump sale as per income tax law, there are two conditions. Only when these two conditions are fulfilled, income tax will recognize the slump sale. Condition 1. All assets and liabilities have to be handed over. All assets and liabilities. The airline business we are selling, it will have fixed assets, investments, current assets, loans and advances. Everything has to be given. Stock, debtors, cash, bank, everything. In fact, there will be liabilities of the airline business also. Creditors, loans, every asset, every liability has to be handed over to the party who is buying my business. I am not going to go and negotiate with you that, see, you take the following assets and pay only the following loans. Therefore, this 9. You have to take all my assets, you have to take all my liabilities, and you have to pay me one lump sum figure for that. If by chance a single asset or a single liability is left behind, it is not slump sale. All assets and liabilities have to be taken over. Ye clear? And second condition. Is there going to be an agreement between seller and buyer? But this is a massive deal, entire business you are buying. So there is going to be a sale deed and agreement that we will sign. Should not mention value of any individual asset or liability. We are not selling also individual asset or liability. See, supposingly, I am the seller, you are the buyer. I am the owner of Kingfisher business, airline business. You are the buyer. We will do an agreement. In the agreement, we will say, I agree to sell my airline business with all assets and liabilities, at a lump sum consideration of 10,000 crore. By chance, if we write it like this, land worth 500 crore, aircraft worth 6,000 crores, cash worth 100 crores, debtors worth 2,000 crores, Then take the total. Then write liabilities, loans worth 100 crores. If we start writing like that to derive 10,000 crore, it is not slump sale. We have to write lump sum. Of course, I do agree that the person who is paying this 10,000 crore before signing the deal will come and do an investigation along with his expert, who is generally a chartered accountant, to see whether it is worth buying this. There are merchant bankers who will do valuation of your business, that this is the best price that you should be selling. Is this overvalued, undervalued? This is the best price at which you should be buying that business. Supposingly the seller is quoting 10,000 crore. The buyer may negotiate, no, 10 is too high, 6,000 crore. Finally, they settle the transaction at 8,000 crore. Negotiation can happen. Based on, you can say, yeah, you are saying you have land, but that land has become old. Or you are saying that you have aircraft, but unused aircrafts, a lot of parts will have to be replaced. So please reduce the values. When doing negotiation, you can do it orally. When finally you derive that figure, that one figure has to be written in the sale deed. You should not be mentioning values of individual asset and liability. The agreement is simple. My airline business will be yours with all assets and liabilities. 10,000 crore will be mine. That is called lump sum sale. Two conditions to make a transaction slump sale. Condition 1, all assets and liabilities have to be taken over. And condition 2, sale deed should be mentioning only that one figure. Sale deed should not be mentioning values of individual assets or liability. Individual asset or liability not to be mentioned in the sale deed. Everyone is clear? Absolutely clear. Now how are we going to do? Meaning understood. Now we will go to the computation of slump sale. And in course of computation of slump sale, we will understand why cost of acquisition is complicated. Where are we learning slump sale? In which heading we are learning? This is point 14 of which list? Cost. And in one thing we understand, okay, the difficult aspect here is cost. Think about it. Selling price we know, 8,000 crores. Sale of business. Business being the capital asset. Selling price is that one amount written in the agreement. Problem is the cost. See, if I would have sold only the land, I know cost. If I would have sold only the building or the aircraft, I would have known the cost. But I am selling my entire. What is cost of business? It's complicated. Thus, this is a part of special cases of cost. Understood? Computation of capital gain on slump sale is no different. First step is going to be gross sale consideration. From gross sale consideration in slump sale also we will subtract. This is going to be a major chunk because understand there will be a broker involved. A deal of 8,000 crore cannot be done without involving a middleman, because nobody pays 8,000 crore in one installment. Some payments will be made, and then if there is a dispute, so there will be problem for buyer, seller both. There will always be a broker. By the way, it is this broker who has convinced the buyer to buy this. In these big deals, seller gets money, but the guy with the biggest benefit is the person who was the middleman in the deal. You see all the mergers and acquisitions happening around you. You see all the organizations buying each other. There is always a broker involved. And normally in your property deals, we pay only 1% to our. We pay only 1% to the broker. Who was it? You were it, no? Normally in prep, I know one of your. We pay only one. That also these days we negotiate. For such a big value, you won't be getting 1%. We give only 0.5% on sale. In fact, rental transactions, once upon a time we used to give 1 month current. Now so we give only half month current. The rental values have increased. Broker ka effort has not increased. They take it or leave it. And everyone wants work and business. But in these cases of business purchase, even now there is a system of paying 5 to 10%. Of course, when the amount becomes very high, then these brokers also agree at 5. But for an amount like 100 crore, 50 crore, you can easily say that the broker has earned 10 crore rupees. 10% at least. The broker gets the deal done. And in business mergers and acquisitions, the property deals, so there are property brokers, separate experts available for them. But business mergers and acquisition, the broker is invariably and most likely a chartered accountant who knows the real valuation of a business. Advanced financial management will be taught to you. Okay. So ladies and gentlemen, yes, there will be transfer expense. What will we get with this transfer expense? Net sale concept. One thing we all know, under all circumstances, whether before 22 July or after 22 July, it was always cost of acquisition. It was always cost of acquisition. Now why? What are we selling? If you have understood the meaning of slum sale, what are we selling? Entire business. Will that business involve sale of fixed assets, current assets, investment? Bro, stock, debtors, cash also are given. Remember this line. So the values of all of them will come in the net worth, in the cost of acquisition. We can't be having indexation on stock, debtors, cash, bank. I hope you understand. An individual asset determination of cost is easy, but here we have to determine cost of the entire business, and the rule given here is that the net worth of the business or undertaking or unit, whatever institute calls it, will be considered as slum sale. The net worth. You know what is the accounting definition of net worth? Share capital plus reserves and surplus. Correct. But some organizations may not be registered as companies. So you can't be saying in companies perspective. It can be a proprietor also. Give me a better answer. Of assets minus outsiders liabilities. Is that net worth? The net worth of this business. Matlab, you can say that my business is having this much value. This is the value of my business and I am giving it to you at 8,000 crores. How will I find the value of my business? Total of my assets and minus the total of my liabilities. Do you understand? That is nothing but net worth, and the net worth of that business will become the cost of acquisition here, giving you the capital gain on slum sale. So one thing everyone understands, that asset minus liability is accounting definition. How to calculate is what we are going to learn. Once we calculate working note 1, we will get our net worth. Once we get our net worth, we will get our cost of acquisition, and that will give us our capital gain on slum sale. And do you realize cost is the only complication? Because everything else is very easy. One amount in the sale deed. Hello. Broker charges, net amount, and only cost of acquisition will be there. Correct or no? So yes, ladies and gentlemen, I do have to discuss with you how to calculate. Just imagine, my working note 1 will be what? Net worth. What is relevance of net worth in slum sale? This net worth only is going to go and become cost of it. So of course I have to discuss with you net worth. Everyone is with me? I'll discuss. Don't worry. But we are living in the anti-era of income tax. It's been a while we haven't criticized her, hasn't it? You think after this budget she deserves appreciation? Then it reminds me from a dialogue from the web series Mirzapur. Mirzapur, the name itself is capable to activate souls. In that web series, now there is a line: middle class आदमी nahi, customer. Customer. nahi. Do one thing in your free time. Tax only 1 minute. In your free time, just search on Google or search on YouTube middle class आदमी from Mirzapur. If that scene comes, you will understand that basically now this middle class is not going to take life insurance, medical insurance for going in new regime for the benefit of 12 lakh, and 10 years later you are going to be dependent on someone. Or are you trying to say that middle class will remain at 12 lakh because the moment you cross 12 lakh, you have to pay all the tax. Of course, that video maybe you have seen. Now there is one more confusion. Sir, my income is 12 lakh and 1,000. So will I have tax liability of 60,000? No, I will have tax liability only of 1,000. In income tax, there is a concept called marginal relief, which a lot of people are not aware or talking about. Today only we will make. At least one knowledge wala video should be made every day. You can like, share, subscribe, hit the bell button, never miss an update. Okay, we'll do that today. One knowledge wala video on marginal relief. We'll talk about it in that video. And I know to which your reaction. Sir, apne syllabus mein hai. In tax rates we will discuss margin. Okay sir, so we will not like, share, subscribe. ठीक है, don't. No problem. No problem. ठीक है. Auntie 2 years ago had an objection here in this calculation. Auntie said you are selling an entire business. See, let us understand, this is the balance sheet of your airline business. So will there be land, building, plant, machinery, furniture, fixture, all these assets in the balance sheet? Will there be some liabilities like loans, creditors, etc.? Are we giving away all assets and all liabilities to our buyer? That means, can I say we are selling everything? Supposingly, instead of doing slump sale, I would have sold only this land. There would have been capital gain on land. The sale consideration of this land would have been actual cost or stamp duty value, whichever is higher. Sorry, actual cost, actual sale consideration or stamp duty value, whichever is higher. On the sale of individual asset, do we have that provision? Supposingly, there are some unlisted shares here. If I sell them individually, it is actual selling price or fair market value, whichever is higher. 50CA. But when sold as a group, the total that I am getting is the actual sale consideration. And in the gross sale consideration, you are taking only actual. Is it possible that in such a business, big business deal, which involves immovable property means cash involved. Unlisted shares also private equity, cash involved. And an entire business is being sold. Is it possible that final deal was 10,000 crore only, 2,000 crore was in cash? Correct? Actual sale consideration or fair market value of business, whichever is higher. Fair market value of what? Obviously the business that you are selling. No, we are not selling individual asset. Actual sale consideration or fair market value, whichever is higher. Auntie brought this. Now from the last 2 years, slump sale is now a special case of sale consideration as well as cost of acquisition. Think about it. Because we have 50C actual or HDV, whichever is higher. We have 50CA unlisted shares, actual or FMB, whichever is higher. By the way, this 50B is in that sequence. B, C and CA. So now it is special case of sale as well as cost. We could have done it over there or here. Once upon a time, 2 years ago, only cost had to be taught. Selling price was as per agreement. Auntie said, no, here also we will take actual or the market price of this asset. That is the business, whichever is higher. But because traditionally, historically, all we tax teachers have been used to teaching slump sale under cost, we keep it under cost just to let you know now. Only cost is not special. Selling price, cost price, both are special. We will have to make working note for both. Cost, so we were making only historically. Now we will make working note also for sale consideration. Is that clear? Is that clear? So yes, there will be 2 working notes. One for cost, one for selling price. Second, Auntie brought one more change here. If you observe carefully, I have written transfer of business. Everyone is with me? Earlier, the word written here was sale of business. Now, I am giving my airline unit and receiving 8,000 crore from you. So, it is slump sale. I am giving airline unit to you and receiving 100 kg gold from you. 5,000 kg silver from you. 10 acres of land somewhere. And against that total, I am giving you business. See, we are not writing the value of individual asset and liability of the business that I am giving you. But the consideration can be in different kinds. No? So consideration ka detail we are writing. Business that we are selling ka detail we are not writing. It is still a slump sale. But this time the sale consideration is in kind. So here, this actual sale consideration need not be monetary. She added the word transfer because actual sale consideration will be monetary plus the value of non-monetary, which will be compared with fair market value, whichever is higher. She has complicated the entire sale consideration. Once upon a time, 3 years ago, I used to tell students, let's learn working note 1, net worth. Net worth equal to cost and slump sale over. But now we have to spend more time on slump sale at the same remuneration. More time on slump sale. One day, Auntie will make income tax law easy. As per announcement, the words will be 50%. Means size of income tax law will be 50%, not in terms of number of sections. Otherwise, merge sections and keep the same. She said the number of words in the Income Tax Act will be half. So we believe that the time taken to explain should be half. Remuneration will be full. Because when my work increased, my remuneration did not increase. So when my work will reduce, I will not accept reduction. You think I should? So I am not listening to you. I hope you are not thinking, sir, we will not pre-book CA final now, because maybe by that time the income tax law reduces, time taken reduces, so maybe there is reduction of fees. There is no concept called reduction of fees. Fee never reduces. Have you ever seen fee reduction? You have. Ek minute, there is a vacancy in my company. You are interested in job? Every year we will reduce by 10%. Pagal. Ladies and gentlemen, we have to learn both working notes. You understood? What, sir? Actual selling price or FMV, whichever is higher, we'll have to understand actual selling price, we'll have to understand FMV. And then, of course, the main working note which we were always doing, that is cost of acquisition. Both working notes. After we get both, we will get our slump sale capital gain. This capital gain is long term or short term. We have to decide that. Sir, ek minute, indexation is not available. So long term, short term required. Why? Tax rate. Tax rate is different, no? If the business that you are selling was done for more than 36 months, then it will be considered as long term. And if the business was done for up to 36 months, then it will be short term. I'll tell you what, 36, 12, 24. 12 had 3 cases, 24 had 2 cases, everything else was in 36. So this was not there in 12, 24. Where should it go? Obviously 36. But then at the same time, we are also aware that the 36 concept is getting eliminated from 23rd of July. So from 23rd July greater than, because this is not a listed share, no, this is a business, and up to 24 will be short term. Of course, we are aware of this amendment. The whole question is now about going and learning our 2 working notes, bro. Working note 1. What are we learning in working note 1? Calculation of net worth. Net worth is going to become cost of acquisition. Meaning of net worth in accounting is assets minus liabilities. Bro, we will do that only. We will take assets. From assets, we will subtract liabilities. Asset minus liability will become our net worth. There is a business that we are transferring. That business will have all fixed asset, current asset, loans, advances, everything. There will be liabilities also. We have to take everything from that business. Correct? Eh? By the way, which asset and which liability we will be giving to our buyer? All, then only it is comes. So will we be giving our depreciable assets? Yes. My question to you is, whenever we give our depreciable assets individually instead of a group, instead of the full business, what is cost of acquisition? So in the group also, we will consider the WDV under section 32. What is going to be considered as value of depreciable asset? See, when you do accounts amalgamation and you are asked to calculate intrinsic value of shares, net worth of a company, you take FMV of assets and FMV of liabilities. But we are not doing accounts. We are not doing valuation of the business. We are finding net worth. This value will become cost of acquisition. So individually what you take, that also you will have to take in the group. But then will we be giving our non-depreciable assets also? So our non-depreciable assets will include our investments, current assets, land, stock debtors, cash bank also. They don't have WDVs. So what will we take? Book values. Non-depreciable asset, maybe we will be taking the book value. Bro, now I will explain the logic of something to you. You want to know the logic of something? This will include value of stock debtors cash. That will get added in the assets. Minus, of course, we will do our liabilities. Will this be net worth? And this net worth will become cost. My question is value of my stock debtor cash bank coming in this cost? Yes, no, because it is coming here. So coming here. So coming here. If my cost of acquisition contains values of stock debtors and cash, there can't be indexation on those values. Which is why on slump sale, there is no indexation. Understood or no? If you wanted to know the excuse me, if you wanted to know the logic. Logic is clear, bro. So for depreciable assets, WDV. For non-depreciable assets, is it possible that this business is a business that we had started under section 35 or under section 35 AD? Yes, nahi. What is 35? 35 is what? 35 is research. What is 35 AD? Specified business. Is it possible that business I am selling in slum sale? So that business ka all assets also I have to give. This asset ka value I will take. Now you will have to tell me the reason. Because the cost of this asset has already been taken as 100% deduction at the time of acquisition. Any value that we take here will again become deduction under capital gain. You can't take deduction twice. Therefore, 0. You understand? This will give you your total of assets, and a last warning that at this time you will ignore any revaluation of asset. Any revaluation of asset will be ignored. You know why this is necessary? Please understand, we are doing cost. Means whatever answer I get from here will become deduction. Therefore, I am taking 0 off here, no, because I have already taken deduction. How can I manipulate this to take tax benefit? Supposingly here I have land acquired at 1 lakh rupees. I revalue the land to 10 lakh rupees. Will that increase the book value? Land account debit to revaluation reserve. So assets will increase. But revaluation reserve is reserves and surplus. It won't come in liabilities. I will end up increasing my net worth, that is cost of acquisition, that is my deduction. If revaluation gets permitted, so what people will do? Purposely inflate value of assets. Inflated assets simply mean inflated net worth. And inflated net worth means inflated cost. And inflated cost means reduction of gain. You understand the ripple effect? Revaluation will not be allowed. You have to take the book value. So depreciable asset, WDV. Non-depreciable asset, book value. If you've already taken full cost as deduction, nil. This will give you total of assets without considering any revaluation. Liability is very easy. You have to take the book values of all your liability, whether it is your creditors, loans, etc. This will give you your total of liabilities. Everyone is with me? When we do total of assets minus total of liabilities, what will we get? Net worth. And what will this net worth become? Cost of acquisition. You understood? Once upon a time, slum sale ka explanation used to get over here because only cost was complicated, the net worth. Now the complication has also been inserted in the definition of, bro, sale consideration. Sale consideration also happens to be a complicated issue now. So we have to go and learn working note 2 because we are determining gross sale consideration. Under gross sale consideration, now what are we going to take? Actual sale consideration or fair market value of the entire business unit undertaking out of the two, whichever is higher. Like we do in 50C and 50CA, we have to do the same thing in 50B as well. See, even then, actual sale consideration, some people think, sir, that is so easy. No, that is to what I have received. Nice, sir. Since they changed the word sale to transfer, we realize that the receipt may not be only in money. So what is this? There is some money that the buyer has paid you. That money you will take. Is it possible that the buyer in course of this slum sale is giving you some property? So for that property, we don't use the term market value. For property, what term we use? So we will take stamp duty value of the immovable property received. But then can the buyer also give me some other assets like jewelry, shares in consideration? Here I will use FMV of other assets. Can I call this the total actual sale consideration divided into various different parts? See, what was the rule for slum sale? The business that you are selling, you can't write individual assets and liabilities. But the consideration, if received in different parts, those details have to be written. So we have taken everything that we receive as a part of our sale consideration. But that's not enough. Is it still possible that along with all this, there is some cash? which was not written in the agreement. To undervalue the business, to underpay the taxes. See, buyers have some spare cash lying which they want to put to use, and seller wants to underpay the tax and therefore wants to receive some cash. So in every big deal, there will be some cash involved. Hello. For this reason, we are now going to compare it with your fair market value. This is fair market value of the unit that is transferred. Do you agree? You want to know the definition of fair market value? Computation I will teach you. Definition you want to know? What is FMV of a business? Sir, I have seen this somewhere. Where? Is this assets minus liabilities? And this is becoming the cost. Is this asset minus liability? Of the same business, same assets. And this will become sale consideration. Today, I will prove it to you that when anything is done, yesterday when I took that seminar on budget provisions of direct taxation, big trade body, one of the premium trade bodies of South Mumbai, 200 plus attendees in the seminar. So one senior citizen over there asked me that once upon a time, normal budget and real budget used to come separately. There used to be a separate real budget, a decade ago, in which senior citizens used to get concession, there used to be benefit for disabled, etc. Have they brought anything like that? I said, first of all, it is not a part of direct tax proposals. And secondly, they have not brought any benefits. Last few years from railways, they are taking away the benefits. If you see senior citizen concession, etc., eliminated from almost all express streams. So I did make one statement when the audience burst into laughter over there. Thoda humor you have to keep even when it is hardcore profession. Classroom mein to we keep humor. There are some who have objection. Nahi, sir, tax karo na. Sir, you come here for tax. You do whatever you want to. I am not going to change. ये सब company का असर है ना. I said whenever government will do something beneficial for it will blow a trumpet and make loud announcements. But whenever they will take away benefit, they will secretly take it away without telling anyone. Obviously, nobody is going to make an announcement. Government is not going to make an announcement. Hey, we are taking away benefits. They'll just take it away. Now listen, how, sorry for the language, because I am going to use the word, and by the way, I am the teacher, but I am still apologizing. Our government has been number one haramkhor, rascal. I will prove it to you without repeating the word now. Not what you were expecting with music. Not in the classroom. Same assets, same liabilities. But what is the difference between here asset minus liability and here asset minus liability? Here in working note 1, asset minus liability is going to become cost. In working note 2, asset minus liability is going to become selling price. So the dash government wants obviously this to be very high. Look what they clearly told us here. You can't revalue any of your asset. You can't be taking present value. Bro, I purchased land 100 years ago at 1 lakh. Even now in cost, I am taking 1 lakh only. But will today's value of that land be different from my original cost? But in cost, they are not allowing me to take the revaluation. You want to guess that same land ka value here because they are same assets. You want to guess that same land ka value here will be what? If there is any immovable property, we will be taking the stamp duty value. Means I had purchased a land for 1 lakh. Listen, today's stamp duty value is 1 crore. In cost, it will be 1 lakh. Same land in selling price will be 1 crore. Dash. Will there be my business having, some jewelry, some shares, everything I am giving away, no? If you have these assets, sculpture, artwork, drawing, archaeological collection, painting, jewelry, in this business which you are selling, the same assets you have taken here, they are non-depreciable assets. So here you took their book values. What if their market price has increased by now? Can you take the increased value? In the cost of acquisition? No. But in selling price? Fair market value. So if you have jewelry purchased 5 years ago, non-depreciable. You still have that jewelry. You purchased for 5 lakh. In cost of acquisition, we will take 5 lakh. Today, that jewelry has become 20 lakh. In selling price, we will take 20. Dash. Means wherever the values have increased, increase selling price. But don't increase your cost price. Middle class आदमी नहीं, customer है customer. Exactly the way in which it was said in the web series. And of course, now listen what the government is doing. They are putting some cream on your wound. Bended. They are saying, will there be other assets also? Stock, debtors, cash, bank. We will take book values. See, we are so fair. Like stock, debtors, cash, bank. What value we take in? Cost, book value. And in selling price also. See, no cheating. Reminds me of that Akshay Kumar iconic scene. Ek tera, ek. No cheating. You've seen that? Ek tera, ek mera. Arey wow, really? I'm pleasantly surprised, bro. Government has done that. See, no cheating. Book value in cost, book value in sale consideration. And see, we are so fair. Liabilities. What is the value that we take in cost of acquisition? Here also we will take the. No cheating. No cheating. Your assets minus liability will give you the fair market value of your business unit, undertaking, and ladies and gentlemen, this fair market value or this actual consideration between the two, whichever is higher, will become your gross sale consideration. Harishchandra Ramchandra Mirchandan. You know the story of this name? Harishchandra Ra Machandra Mirchandan. Harishchandra Ramchandra Mirchandan. Sir, that's not fair. Everything is fair in. Thank you. Thank you. Barabar. That's the only thing that you have experienced, because the other things that you were going to say, you have not experienced any of them. War, you have not experienced. Everything is fair in tax. Same asset in selling price, same asset in cost price, different value. Selling price will take present day value, cost price will take historical value. Why? We'll do whatever we want. मैं चाहे ये करूं, मैं चाहे वो करूं, मेरी मर्जी. Understood? Point number 14, everyone. Point number 15. Conversion of debentures into shares. You've heard of the concept of convertible debentures?
Yes.
Sir, what is convertible debenture? That today it is as a debenture, one fine day company will give you the option of converting into shares. So when you purchase, what do you purchase? Debenture. Supposingly your purchase price was rupees 1 lakh. When the company gave you the option, you convert it into equity share. Of course, this conversion, you have the brain to understand, cannot be a taxable transfer. Why? Capital gain will arise only when? What will be sale consideration? Special case of cost, no bro? What will be cost of this share? Bro, after doing the complicated cases that we have studied during the day, this should be ridiculously easy for you. This should be very, very easy for you. Obviously, the cost of debenture, correct or no? Because that debenture ka cost only is making you eligible for this, no? But there is a catch. That by chance you are eligible for indexation. That depends on this date, no? If this was till 22 July, you are eligible for indexation. In case it is indexation, start of indexation is going to be the conversion year. Start of indexation is going to be conversion. See, please understand. If this I did in 0102, this happened in 0506, and this happened in 2425. So they are trying to say that you will start indexation here. Sir, not fair. Sir, why not fair? Why? Why is it not fair, sir? Cost I had incurred here. Then why are they doing this? Why cheating? Come on, give me the reason. Why they are starting indexation here? If this was if this was not the point that I had to talk about, no, I wouldn't have discussed. You have understood amalgamation, demerger. It is very easy. Cost incurred here will become cost here. Why? Why this cheating, sir? That time it was. ये क्या logic है? Indexation has got nothing to do with that. Offer नहीं है बस. So what? Why no indexation of this period is my question. Exempted नहीं, disallowed. Exempted is when you get benefit. गधेड़ा, पागल लोग. There is no indexation on debenture. First point in the list, no. You are not taking capital gain seriously. You are inviting trouble, and no one will be able to save you. This is an irrecoverable and irreparable loss. These chapters, I told you, PGBP का commencement with that capital gain PGBP are absolute no nonsense chapters. These two chapters will together decide your success or failure. You have already sent the invitation to the trouble. Trouble is on the way. You can probably now on the way send a WhatsApp, no, program cancelled. Please return, dear trouble. Once it comes, it won't go back. And it is going to come 3 months now. The trouble is on the way. Then don't in the month of April request ICAI, please postpone exams. Why? Because I have not studied. You must idea. COVID mein students did that also. They did not study, so they forced institute. No, there are people dying. But you are alive, no, give exam. Institute still give the option. Those who are not comfortable, you don't give the exam. We will adjust your fees, not count your attempt. Well, no, cancel for everyone. Why others should give? They did not let other people also give. And the number of these students who are not prepared or who are prepared but they have this mental block is very high. So because of which the genuine people suffer. By the way, there is no COVID now. So exam will take place. Whatever be your level of preparation. You are doing injustice to PGBP capital gain. You are doing injustice to the overall learning experience if you are not taking these two chapters seriously. You have a gap between my lecture and the next lecture. For now, the best or maximum that you can do is this PDF will come at a time when it has to. Rather than this, every word, every alphabet taught in the chapter. I don't want a situation tomorrow that you don't know bonds and debentures, no indexation. You don't know these basic things. You please make sure that you utilize this time effectively. No one is going anywhere. Your break starts at 4:30. Your break you will be taking at 4:30 only. From 4 to 4:30. And if you are found watching Instagram reels or web series in class, no, I'll break your phone into pieces, I'm telling you. Without any monetary compensation, obviously. You will be going through what has been taught to you in capital gains, because tomorrow we are near completion of this. We will be doing cost of improvement and immediately going to the questions. Questions means starting from the definition of capital asset. And I am going to skip questions considering your current condition. It's all about whether you want me to do the questions or not. And I am not someone who gives chances to people. I don't believe in giving chances. There is no second attempt in my philosophy of teaching. I am very clear on this. Okay. You have any doubt on what I have taught here?